Okay, good morning all. So continuation to the previous day 2. So we are left with few questions. Let's complete those questions so that this mighty 50 gets over. Look into question number 34. In question number 34, this is a question related to assessment under GST. The wheat trader obtained permission for provisional assessment and supplied 3 consignments of furniture on 28 April 2021. The tax payment on provisional basis was made in respect of all the 3 consignments on 20th May 2021. Consequent to the final assessment order passed by the Assistant Commissioner on 21st June 2021, a tax of 1,20,000 and 1,50,000 became refundable on first and third consignments. So actually what happened in case of provisional assessment, first we will be unable to compute the GST payable. As we are unable to compute the GST payable, we request the department to compute the GST payable, that is called as provisional assessment. So officer will specify, okay, you have to pay some amount, and again there will be finalization of assessment. So when finalization of assessment happens, 3 things could happen. Number 1, maybe the final assessment amount is more than the provisional assessment amount, or the final assessment amount equal to provisional assessment amount, or the final assessment amount may be less than the provisional assessment amount. Suppose if the final assessment amount is more than provisional assessment amount, the differential amount we need to pay. Suppose if it is equal, we don't have to pay anything. Suppose if it is less, if the final assessment amount is less than provisional assessment amount, means we have excess paid, so that we will get as a refund. This is the story. So here with respect to consignment number 1, consequent to the final assessment order, second paragraph you read, consequent to the final assessment order passed by the Assistant Commissioner on 21st June 2021, a tax of 1,20,000 and 1,50,000 became refundable. Okay, so which means final assessment amount is less than provisional assessment amount on first and third consignment, whereas a tax of 1,20,000 became due on second consignment. The wheat trader applies for the refund of the tax on first and third consignments on 12th July and pays the tax due on second consignment on the same day. But with respect to second consignment, what happened? With respect to second consignment, the differential amount is payable. Okay, tax was actually refunded to it of first consignment on 8 September, whereas third consignment on 18 September. Customers of the wheat trader who purchase the consignments have not taken ITC. Determine the interest payable and receivable, if any, under CGST Act by the wheat trader. So this is interest computation in case of provisional assessment. So whenever we need to get the refund, so we should get the refund within 60 days from the date we are making application for refund. So final assessment over. When final assessment over, we need to make application for refund. So we made application for refund. What is the time limit within which we need to get the refund? 60 days. Please check the question as to when are we making application for refund. Which date we made application for refund? The wheat traders apply for the refund of the tax of first and third consignment on 12th July 2021. So 12th July 2021 is the date of application. And when the refund they got for first consignment? 8 September. Is it within 60 days or beyond 60 days? You count from 12th July 60 days. So 12th July, in July, take your calculator, 31 minus 12. 31 minus 12. So what is the number of days? 19 days in July. Then August, 31 days. August, 31 days. And September, 8. September, 8. So how many days? 50. So within 60 days the refund is given. So whether any interest is receivable? No. Interest is not receivable in this case. Is it clear? So that is the answer. So for the first consignment, date of supply, so 25, refund is given. So number of days for which interest is payable will be nil, as refund is granted within 60 days from the date of application. Is it clear? Then next, with respect to third consignment, again third consignment, what is the date of provisional assessment got finalized and we made application? So again same day, 12th July only we make application for refund. And for third consignment, When are we getting the refund? 18 September. Now you count again from the beginning, number of days. So 31 minus 12, 19 days in July, then 31 days in August, then September 18 days. How many days total? 68 days. But what is the delay? 8 days. They should have given refund within 60 days, but they are giving refund beyond 60 days, for which they need to give us a interest. What is the rate of interest? 6% per annum. Remember, whenever we are paying interest to government, it will be 18% per annum in GST. Whereas whenever government is giving refund, it will be 6% per annum. In customs, whenever we are paying interest to government, it is 15%. Whenever government is giving refund, it will be 6%. Okay, so you remember this. Whenever we pay interest to government, in GST it is 18%. In customs it will be, whenever we pay interest to customs department, what is the rate of interest? 15%, not 18%, it is 15%. Whenever government is giving refund to us, let it be GST or let it be customs, the rate of GST will be, the rate of interest will be 6%. Okay, so here what should be taken as the rate of interest? 6%. For how many days interest will be computed? 8 days. Why 8 days? Because the delay beyond 60 days is 8 days. Now, how much is the refund? Check the question. The refund amount is 1,50,000. So 1,50,000 into 6%. 1,50,000 into 6% into 8 by 365. What is the amount that you have got? 197.26. That is rounded off to 197. Are you understanding this? Then next one pa. Second case. Second consignment. For second consignment, payable or refundable? Payable. Because we need to pay the differential amount. When we need to pay the differential amount, we need to compute interest at what rate? 18% per annum. From when? Not from the date we make application, etc. and all. This is payable. When it is payable, we should check the due date. We should check the due date. The second consignment pertains to which month? See there. So, consequent to the final assessment order, Divi Traders supplied 28th April na. All three consignments are supplied on 28th April. First paragraph it is there. All three consignments are supplied on 28th April. 28th April if the transaction happens, what is the due date pa? 28th April if the transaction happens, in GST what is the due date? Next month 20th. Next month 20th. So 20th of September. Now you count from that date, due date. So September, how many days? 10 days. Okay. And when are we paying the differential amount? 10 days. Because don't count 20th. 20th is the due date. So don't count 20th. The next day we need to count. So 10 days in September. And when are we paying the differential amount? See there. And pays the tax due on the second consignment on the same day. That is 12th July. Now count. September it will be, April, May, 20th May, 20th May. So 28th April means 20th May will be taken. So in May 11 days, correct. So I took September. So 11 days in May, take that. 11 days in May, 30 days in June and 12 days in July. How many days? 53 days. For 53 days, we need to compute interest at 18% on what? Differential liability payable. What is the differential liability that is payable? 1,20,000. So do the computation. 1,20,000 into 18% into 53 divided by 365. 3,136. Easy, understood? So whenever you get a question on provisional assessment, like this it will be. So just interest computation, you remember how to compute. Then look into question number 35. Examine whether the offences committed in each of the following independent cases are bailable. Further, determine the quantum of punishment on prosecution under the CGST Act in each of these cases. So prosecution means imprisonment. Prosecution means imprisonment. So we need to discuss about the imprisonment provisions, and also we need to discuss about the bailability provisions, etc. Okay. So first we will see the situation, then I will explain you the provision. Situation number 1, Homigaba collects 240 lakhs as tax from its clients and deposits 150 lakh with the central government. So generally whenever an amount is collected as tax, but not paid within 3 months. What is the meaning of amount collected as tax? You are not supposed to collect the tax, but you collected the tax. You are not supposed to collect tax, but you collected the tax. That is called as amount collected as tax, but not paid within 3 months. Then it is an offence. It is an offence that leads to imprisonment. And what is the imprisonment period? Depends on the tax involved in the offence. Minimum there should be 2 crores tax involved in the offence. So see there, how much is the offence? 240 collected, 150 deposited. So the tax amount is only 90 lakhs, correct? So it does not exceed 2 crores. So imprisonment will not be applicable. Is it clear? Imprisonment will not be applicable in this case. And when imprisonment is not there, will it lead to arrest? No, arrest also 2 crore is the limit. So therefore, arrest also does not arise in this case. As there is no arrest, the question of bailability does not arise. Continue further. Greater than 2 crores, greater than 2 crores. Okay. Next, continue further. It is found that he has falsified financial records and has not maintained proper records to evade the tax. So falsified financial records means what default? Books of accounts default. Okay. So total there are some 6 offences that leads to imprisonment. That is ICEBID. I's bid. You remember this? I's bid. I for invoice default. C for collected an amount as tax and not paid within 3 months. Okay. Then E for erroneous refund. B for books of accounts default. I for ITC default. And D for dealing in goods liable for confiscation. So these are the list of offences. Okay. So you can see your book. What are the offences that leads to imprisonment? Page number 264. Page number 264 you can see. Page number 264. Okay. So see this. I's bid. I for invoice default. What is invoice default? Supply without invoice or invoice without supply. C for collect an amount as tax and not paid within 3 months. E for erroneous refund. B for books of accounts default. Books of accounts default means what? Not maintaining proper books of accounts or fake books of accounts, etc. Then I for ITC default. ITC default means you are not supposed to collect, like you are not supposed to avail ITC, but you have availed ITC like that. All ITC related defaults. Then D, dealing in goods liable for confiscation. These offences plus attempt to commit or abetting commission of I's bid. What is that? Attempt to commit. Sir, murder, attempt to murder, both are same. You understood? So you tried the offence, but you have not committed the offence. Same as if you have committed the offence. Abetting to commit an offence means supporting. You are doing an offence, I am supporting you or I am planning that offence. That is called as attempt to commit or abetting commission. That is also an offence that leads to imprisonment. For example, usually in murder cases and all, say 3 people together did the murder. Not 3 people will kill the person. One person will hold the hands, another person will hold the mouth, yet another person will stab. You understood? But all 3 are culprits, correct? Now A1, accused number 1 is the one who stabbed. Accused number 2 is the one who closed his mouth. Accused number 3 is the one who holded the hands. So a committed offence is the one who stabbed, and who attempted to commit. Who is that attempt to commit? The one who holds is not murdering, but he is attempting. Na? You understood or not? Like that. Or some other mastermind who made a plan. Night time you go, at this time you do, like this. He is also coming under accused. Is it clear? That's what they are telling. Attempt to commit or abetting commission of offence also attracts imprisonment. Okay. Then here collected an amount as tax and not paid within 3 months. Sir, what is the imprisonment, sir. You can see here, imprisonment, if it is books of accounts default, then up to 6 months or fine or both. That is the imprisonment. Books of accounts default always up to, this is first time, up to 6 months or fine or both. Invoice default, which invoice default? Issuing invoice without supply, not both. There are two invoice defaults. One is supply without invoice, invoice without supply. But this is invoice without supply. It exceeds 1 crore but does not exceed 2 crore, then it will be up to 1 year. It is up to 1 year and fine. Okay, it is up to 1 year and fine. Suppose if it is other offences where the amount involved exceeds 5 crores. When it exceeds 5 crores, it is up to 5 years and fine. When it exceeds 2 crores, up to 3 years and fine. Okay, slight change here, the order changed. So you remember it like greater than 1 crore means up to 1 year, greater than 2 crores means up to 3 years, greater than 5 crores means up to 5 years. Okay, so this is for first time. What if it is subsequent imprisonment? Subsequent imprisonment always it will be up to 5 years plus fine. Okay, so you can see here. Now coming back to this question, it is found that he has falsified the financial records and has not maintained proper records to evade the tax. So falsification of financial records means what will be the books of accounts default? What is the imprisonment? Up to 6 months or fine or both. Okay, and will it lead to arrest? No. What are the 3 offences that leads to arrest? Only 3. IIC, same page, page 265 you can see. What are the 3 offences that leads to arrest? IIC. What is IIC? Invoice default, ITC default, collect an amount as tax not paid within 3 months. And that too amount should exceed how much? 2 crores. Only then arrest will be applicable. Okay. And next, what are cognizable and non-bailable offences? Same IIC. If it exceeds 2 crore but does not exceed 5 crore, it is non-cognizable and bailable, means we will get a bail. Suppose if it exceeds 5 crores, it is cognizable and non-bailable offences, means we will not get the bail. You understood? Yeah, first 3 offences leads to arrest. What are they? IIC. If it exceeds 2 crore, definitely arrest will be there. If it exceeds 2 but does not exceed 5, then we will get a bail. So it is non-cognizable and bailable. What is the meaning of cognizable? A person can be arrested without the warrant is known as cognizable. What is non-cognizable? A person can be arrested only with a warrant, court warrant. That is called as non-cognizable. Okay. So therefore, amount exceed 2 but does not exceed 5 means, okay, it is non-cognizable. Even bail also will be granted. If it exceeds 5, it's a severe offence. So due to that reason, it is cognizable plus non-bailable offence. Okay. Now, is books of account default given in this list? No. As books of account default not given in this list. What is the list? IIC. Books of account not there. So therefore, there is no question of bailability for this. Is it clear here? Understood? Next, look into another question. Datukeshwar Dutt collects 630 lakhs as tax from its clients. Again, it is amount collected as tax, but deposits only 120 lakh with central government. 630 minus 120 is how much? 510. 510 means it exceeds 5 crores. It exceeds 5 crores. What is the imprisonment? Up to 5 years. I told you imprisonment. What is the imprisonment? Greater than 1 crore means that to invoice default 1 year. Greater than 2 crores means 3 years. 125, 135. You remember like this. 125, 135. 1 year, 1 crore, 1 crore, 2 crore, 5 crore. 1 year, 3 years, 5 years. Okay. So more than 5 crores means 5 years. And as it exceeds 5 crore, will it be leading to arrest? Yes. And will it come under bailable or non-bailable? Non-bailable. Cognizable plus non-bailable. Are you understanding this? So therefore, balance amount. What will be the implications if Homi Gaba and Datukeshwar repeat the offences? If they repeat, always if they repeat, whatever may be the offence. In the ice bid, whatever may be the offence, if they repeat, always it will be up to 5 years plus fine. Okay. That is the answer we need to write for this. This is a question on offences. Yes, one more 5 years. That is like he became senior now. Every time he commit the mistake, already he suffered. First time, okay, so 2 crores, so 3 years, 1 crore 1 year we have given. Again he is repeating, means how dare he is to do, so 5 years he should serve the imprisonment. And what is the minimum imprisonment? See, this is up to 5 years. What is the minimum imprisonment? 6 months, means between 6 months to 5 years, any period can be imposed as imprisonment. Okay. Next, question number 36. So the previous question is on offences, imprisonment, arrest related to that provisions. Okay. Then question 36. Nirmal Private Limited, registered in Vasi, Maharashtra, is engaged in supply of taxable goods and services. In the month of April, it sold goods worth rupees 5 lakh excluding GST to Suraksha Enterprises and collected tax at 28% on the said goods from the buyer. However, the actual rate of tax applicable in the given case was 18%. Nirmal Private Limited deposited the tax at 18% on these goods to the government on the due date and retained the remaining tax collected. Determine the amount of penalty, if any, that may be imposed on Nirmal Private Limited in the month of October in the given case, ignoring the interest payable. So we have penalty provisions. In that, the major penalty provision is section 122 subsection 1. They have listed out some big list of penalties. So you can see that in page number 262. Page number 262, you can see the list of penalties. Bio discredits TFT. What is that B? B for books of accounts default. Books of accounts default means not maintaining the books of accounts or maintaining false books of accounts or fake books of accounts. That is known as books of accounts default. Then I for invoice default. Invoice default means invoice without supply or supply without invoice. O for obstructing an officer from doing his duty, stopping an officer. Then D for dealing in goods liable for confiscation. So you know that the goods are liable for confiscation and you are dealing in those goods liable for confiscation. I for ISD default, input service distributor default. Then S for supply with GSTIN of another person. You are making supply with the GSTIN of another person. So actually you should supply with your GSTIN, but you are supplying with some other person's GSTIN. Then collected an amount as tax and not deposited within 3 months, or collected tax not deposited within 3 months, both. What is the difference between these two? You are supposed to collect tax, you collected, but you have not paid within 3 months. And the other one is you are not supposed to collect the tax, but you collected and not paid within 3 months. Then registration related default. What is registration related default? Not getting registered or giving false information for registration. E for erroneous refund. Erroneous refund means, so like wrongfully you have claimed the refund. Bio discredits. D, disposal of goods while detention or seizure is operational. That is, officer is seizing the goods, but you are trying to break that and you are taking the goods. Then I for ITC default. You are not supposed to take the credit, but you took the credit. Then T, tampering with material evidence. So material evidence, documents and all is there now that you have torn. Okay. Next, yes, suppression of turnover. T for TDS TCS default. F, failure to furnish document. T, transportation related default. Now you need to remember this list of offences. For these offences, what will be the penalty? 10,000 rupees or 100% of tax, whichever is higher. Now coming back to this question. Now what is the offence here? Read the question carefully. Actually they are supposed to collect 18%, but they collected 28%, means 10% collected in excess, correct? Means by representing as tax they collected some amount, means collected an amount as tax and not paid within 3 months. So therefore in this case what will be the penalty? 100% of tax or 10,000, whichever is higher. What is the tax? 5 lakhs into 10%. What is 5 lakhs into 10%? 50,000. So 50,000 or 10,000, whichever is higher, how much will be taken as a penalty? 50,000. Is it clear? Next, look into second. Not like that. Here Anyhow, you are supposed to pay 18. You collected it. That you paid also. But 28, that extra 10, you are not supposed to collect. So, offense is only for the 10% now. I collected 28 from you. But in that 18 only I paid. Which means remaining 10 I am putting in my pocket. Means that is cheating. So, fraud is in that place only. So, that's why that much we are paying. Suppose we have not paid full 28%, then entire 28% will be the penalty. You got it? Next, look into second one. Bindusar, Chief Executive Officer of Ashoka Solutions Limited, is issued a summons to appear before the officer to produce the books of accounts of Ashoka Solutions Limited in an inquiry conducted on the said company. Determine the amount of penalty, if any, that may be imposed on Bindusar. See, actually, he is not the taxpayer. Who is the taxpayer? Company is the taxpayer. But he is working in the company. And officer is asking him to produce some documents. Summons means asking him to appear. That is summons. If he is not appearing, then there is a penalty under 122 subsection 3. You can see that. 122 subsection 3, same page. Offences where the person is not directly involved in any evasion, but may be a party to evasion, or if he does not attend summons or produce documents, then the penalty will be up to 25,000. Is it clear? So that's how we need to compute the penalty, up to 25,000. So in this case, a summons were issued, he did not appear. So what will be the penalty? Up to 25,000. Usually in your CMA exams, CMA final exams, they ask only penalty. You write this penalty. You don't bother about CGST Act, SGST Act, etc. and all. Mainly for CA exams, they will specify CGST Act, IGST Act like that. That's where we need to, do the computation separately for CGST and then multiply by 2 for IGST. But for your CMA final exam, just they will ask penalty. You do this computation like this. That is sufficient. Okay. Next. So we need to discuss this question number 37, which is related to that 74A. Now that we have got a new section, 73 and 74 got merged into 74A. So let's complete that discussion related to 74A, and then we will solve the question in terms of 74A. I gave the question in terms of 74, but for you 74A is applicable for that reason. So I'm just showing you that information. Yes, insertion of new section 74A. So this 74A, previously we had total 5 offences. Already I told you that. What are those 5 offences? Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, and erroneous refund. If it is on account of fraud, means intention, then it was fraud or collusion, misrepresentation or intention to evade, then it was 74. If it is error, so by mistake it happened, then it was 73. And 73, 74, 2 sections, lot of people used to make a debate. This will come under 73, this will come under 74. Lot of cases, litigations were there in the court. To avoid those litigations only, so they have brought 74A, one section merging both 73 as well as 74. So therefore, for your June 2025 exams, 74A provisions will be applicable. Okay, so that's what we are trying to read, and we will make note of this. Say this: after section 74 of CGST Act, the following section shall be inserted, namely 74A, determination of tax not paid or short paid or erroneously refunded, or ITC wrongly availed or utilized. So same offences are. So what are the offences? You can parallelly make note here. So this is 57th point. 57th point. demand and recovery, section 74 capital A. So when this section will be applicable? So this is omitting the previous two sections. When this section will be applicable? What are the offences? Non-payment of tax. Non-payment of tax means what? Non-payment of GST. You are supposed to pay tax but you have not paid. That is non-payment of tax. Then short payment of tax. Then next, wrong availment of ITC. Then wrong utilization of ITC. Or erroneous refund. Erroneous refund means you are not supposed to get the refund but you got the refund. Okay. Non-payment of GST, short payment of tax, this GST. Short payment means you are not supposed, like you are collecting but paid less. Okay. Then wrong availment of ITC, wrong utilization of ITC, erroneous refund. Here also we have again a difference. See, just the section they merged, but the concept they retained the same. You understood? The concept they retained the same, just the section they merged. So see this, continue. You understood the 5 offences? So what is it they are telling? Where it appears to the proper officer that the tax has not been paid or short paid or erroneously refunded or ITC wrongly availed or utilized, he shall serve notice on the person chargeable with tax which has not been so paid or which has been short paid, to whom refund is erroneously made or is wrongly availed or utilized, requiring him to show cause why he has not paid the amount specified in the notice along with interest. Okay. Provided that no notice shall be issued if the tax has been paid, etc., is less than 1000 rupees. So less than 1000 rupees, there won't be any notice. Otherwise, notice will be given. Got it? And next, the proper officer shall issue notice under subsection 1 within 42 months from the due date of furnishing annual return for the relevant financial year. So what is the due date of furnishing annual return for the relevant financial year? For example, financial year 25, 26 or 24, 25 you take. So 31st December 2025. From there 42 months. Remember, 42 months. Okay. So to which tax is not paid or short paid, or 42 months from the date of erroneous refund. Okay. Usually if it is first 4 offences. What are the first 4 offences? Non-payment of tax, short payment of tax, wrong availment of ITC, wrong utilization of ITC, then it is 42 months from the due date of filing annual return. If it is erroneous refund, 42 months from the date of refund. Okay. Then next one, where the notice has been issued for any period under subsection 1, the proper officer may serve a statement, means supplementary notice. What is this supplementary notice? Already notice is issued for one financial year. Now another financial year also same offence they have committed. Rather than giving a new notice, they can give a supplementary notice. Okay. So for such periods other than those covered under subsection 1, on the person chargeable with tax. Okay. So may serve means it is not mandatory, it is optional. If they want to give supplementary notice, they can give, or a fresh notice also can be given. Okay. Then next, the service of such statement shall be deemed to be service of notice on such person, subject to the condition that the grounds relied upon, okay, are same. So when they can give supplementary notice, suppose if the original notice is for short payment of tax, supplementary notice is also on account of short payment of tax. If original notice is on account of wrong availment of ITC, supplementary notice is also on account of wrong availment of ITC. Is it clear? So same grounds it should be. Then the penalty in case where any tax which has not been paid or short paid or erroneously refunded or ITC wrongly availed or utilized for any reason other than the reason of fraud or willful misstatement or suppression of facts to evade shall be equal to 10% of the tax due from such person, or 10,000 rupees, whichever is higher. Same, no change. Previously also same. So 10% of tax or 10,000, whichever is higher. If it is fraud or willful misstatement or suppression of facts to evade tax shall be equal to tax due from such person. Okay. So this place there is a difference. Remaining and all it will be the same now. So first this on account of what? On account of fraud. On account of fraud. What are the words used there? Fraud, willful misstatement or suppression of facts. Fraud or willful misstatement or suppression of facts. Suppression of facts to evade GST, correct? Then what will be the penalty in that case? What will be the penalty in that case? 10,000 rupees or 100% of tax or ITC or refund, correct? Depends, whichever offence, whichever is higher. If the offence has tax, then tax. If the offence is ITC, then ITC or refund, whichever is higher, this will be taken. If it is other cases, then what will be taken as the penalty? Other cases means what? Other than fraud. What will be the penalty? The penalty will be 10,000 rupees or 10% of tax or ITC or refund, whichever is higher. Whichever is higher. 10,000 rupees or 10% of tax or ITC or refund, whichever is higher, this will be taken as the penalty. Okay. So there is no change in that. Previously also it was same. Now also it is the same. Okay. They have not changed. Shall be equal to the tax due from such person. But here if you see, here they gave 10,000 rupees whichever is higher, but here they did not use the word. So means it will be what? It will be only 100%. You just strike off this. Previously we had 10,000 rupees or 100% of tax whichever is higher. Now they removed that 10,000 and they are just telling what? They are just telling the tax due from such person. Tax due from such person means only 100% of tax or ITC or refund. Okay. So why you are writing and striking off? Because writing whatever you have written was old provision. So this is the updated one. There is no 10,000 comparison. Just 100% of tax or ITC or refund. Is it clear? Then the proper officer shall, after considering the representation, if any, made by the person chargeable with tax, determine the amount of tax, interest, penalty due from such person and issue an order. The proper officer shall issue the order within 12 months from the date of issuance of notice. So from the notice, what is the time limit within which the order should be passed? 12 months. Previously, we used to determine the order time limit and 6 months before or 3 months before the notice date was. But now it is not like that. First notice due date, thereafter 12 months will be order due date. Okay. Then provided where the proper officer is not able to issue order within the specified period, the commissioner, okay, so officer authorized by commissioner in rank may, having regard to the reasons for delay, so to be recorded in writing before the expiry of the specified period, extend the set period by a further by maximum of 6 months. This point was not there earlier. Now they have given 12 months plus it can be extended for a further period of 6 months. Okay, understood up to this? Next, all these are common now, whether it is fraud or non-fraud, this is common. There is no difference in the time limits. Okay, then the person chargeable with tax where any tax has not been paid, etc. So may before service of notice pay the amount of tax along with interest payable under section 50 on the basis of his own ascertainment or the tax ascertained by the proper officer, and inform in writing, okay, so that he shall not be served any notice under subsection 1 or the statement under subsection 3 as the case may be. and the penalty payable under this act will not be payable. What is that? Before notice. Before notice itself, if you know that you have not paid, if you have paid, then you don't have to pay any penalty, fully waived off. Is it clear? Before notice, before notice. Then pay the said tax along with interest within 60 days of show cause notice, and on doing so, no penalty shall be payable and all proceedings shall be concluded. So before notice also no penalty, or after notice within 60 days also there is no penalty. Are you understanding this? Then the person chargeable with tax where any tax has not been paid or short paid or erroneously refunded on account of fraud, willful misstatement, suppression of fact. So far whatever we have seen is other cases. In other cases, what is the waiver? Come on. What is the waiver? Tell me. Reduced penalty. Paid before show cause notice. Paid before show cause notice. What is your answer? If it is paid before show cause notice, penalty or no penalty? No penalty. There is no penalty if it is paid before show cause notice. If it is paid after show cause notice within 30 days, what is paid? Tax and interest. Okay. So one second, I'll just make this as a tax, okay, or interest paid before show cause notice. Paid before show cause notice. This is tax or interest, means in the sense like tax and interest, because tax, when there is a delay, interest also payable. Paid before show cause notice, then there is no penalty. No penalty. Suppose if it is after show cause notice, tax and interest after show cause notice, but within 60 days. But within 60 days, then also no penalty. Other cases, otherwise normal penalty. Whatever penalty that we have computed, that normal penalty is payable. Clear? Interest is different, penalty is different. Interest, no. For calculating interest will not include penalty and all. Interest is always on tax. Interest is not on penalty. Okay. Tax amount, yes, that's what. 10% of tax or ITC or refund. Whatever is due. Whatever is due. For example, if some amount is already paid, on that interest will not come. Penalty also will not come. So penalty will be only on the due amount. Okay. Next. Here, now we are discussing in this place. In this place, what is the discount that we have? So look into this. In case of fraud, before notice if the person has paid, before notice if the person has paid, how much will be the penalty payable? Penalty equivalent to 15% of such tax. Got it? 15% of such tax. Suppose if it is paid within 60 days from notice, penalty will be 25% of such tax. Is it clear? Suppose if it is paid thereafter within 30 days from order, then penalty equals to 50%. That is 60 days from order, penalty equals to 50%, and in other cases, otherwise it will be normal penalty. Okay. So 3 discounts we have, whereas in the other case we have only 2 discounts. Before notice if you pay, no penalty. Within 60 days from notice also if you pay, there is no penalty. But in this case you see, so tax and interest paid before show cause notice, paid before show cause notice, how much will be the penalty payable before show cause notice? 15% of penalty, whatever is the penalty on that 15%. Okay, suppose if you pay within 60 days from show cause notice, correct? Within 60 days from show cause notice, then within 60 days from show cause notice, then how much we need to pay? 25% of penalty. Suppose if it is within 60 days from order, within 60 days from order, then it will be 50%, 50% of penalty, and in other cases, otherwise it will be normal penalty. Is it clear? Otherwise it will be normal penalty. If the tax and interest paid before show cause notice, 15% of penalty. Within 60 days from show cause notice, 25% of penalty. Within 60 days from order, 50% of penalty. Otherwise it will be normal penalty. Okay. Otherwise means after the 60 days from order. It's like, see here. First what happens? It is like, first there will be notice, show cause notice. First there will be show cause notice, and after show cause notice they will pass an order. Okay. Now after order you are making the payment. If you pay at this stage, this is other than suppose if it is fraud, you take fraud case. If you pay before show cause notice, if you are paying, suppose if you pay at this stage, okay, if you pay at this stage, what you need to pay? Tax anyhow you need to pay, because you have evaded tax or ITC, or refund you need to pay, and thereafter you need to pay interest also you need to pay, plus you need to pay what? 15% of original penalty. What is the original penalty? 100%. See this, 100% of tax is the original penalty. In that 100%, what is 15% means? 15 rupees. You understood? Tax 100 100 we have to pay as penalty. In that 100, how much we will pay? Only 15 rupees we will pay as penalty. That is the meaning. Suppose after show cause notice, but how many days? After show cause notice, 60 days. After show cause notice, 60 days. In this stage if you pay, then what and all you need to pay in this stage if you pay? In this stage if you pay, then also you need to pay tax, same tax, ITC, refund, that you need to pay, plus you need to pay interest also, plus you need to pay 25% of original penalty. Suppose if the original penalty is 100 rupees, how much you need to pay? 25 rupees you need to pay. Suppose if it is after 60 days, this is after 60 days from the show cause notice, okay, this is exactly 60 days. After 60 days from show cause notice or after 60 days from order, at this stage if you pay, then you understood, after 60 days from show cause notice but within 60 days from order, at this stage if you pay, then tax, ITC or refund, that you need to pay, plus no doubt interest also you need to pay, plus how much you need to pay? 50%. If the original penalty is 100 rupees, you need to pay only 50 rupees. 50% of original penalty. And suppose if it is beyond 60 days from order, then at this stage if you pay, so if you pay here, it is like this. If you pay here beyond 60 days from order, then tax, ITC or refund plus interest plus original penalty. What is original penalty? 100% of tax, ITC or refund. Understood? Clear? Got the clarity? So this is in case of fraud pa. This is in fraud cases. Fraud cases. Okay. So this is what you need to remember, because if at all they wanted to ask a question, they can make a question on this related to penalty computation under 74A. Okay. Now what we are discussing, these are all the differential provisions. Now what we are discussing is the common procedure. What is the procedure? What is the procedure for section 74A? First, what will happen? If it is non-payment of tax, non-payment of GST, non-payment of GST, or short payment of GST, short payment of GST, or wrong availment of ITC, wrong availment of ITC, or wrong utilization of ITC, okay. In these cases, non-payment of GST, short payment of GST, wrong availment, wrong utilization, okay. In these cases, first we need to see the financial year. First we need to see the financial year for which this happens. Say financial year is 2025-26. Financial year is 2025-26. For this financial year 2025-26, what is the time limit within which the notice to be given? First, for this we need to find out the due date of annual return. Due date of GSTR 9. What is the due date of GSTR 9? 31st December 2026. From 31st December 2026, what is the time limit within which the notice to be given? From here, show cause notice, show cause notice, in short SCN. Okay, what is the time limit? Respond within 42 months. 42 months. Any extension? No extension, boss. No extension here. 42 months. After show cause notice, what is the time limit within which the order will be passed? Demand order. Demand order. What is the time limit within which demand order will be passed? 12 months plus it can be extended for a further period of 6 months. Okay. So this is the procedure for section 74A, which is common. And some students who, like, I don't know, student or someone else, they posted, all this is waste of time, don't read this, so read some revision, some other video they were telling, read some revision and go for exam. Promise pa, no one has covered all these things. In the entire YouTube, no one has covered this supplementary study material because they thought these are all not applicable for exam. You understood? And no one will sit and read and understand, na? So therefore they have not given. But trust me, these are all very much applicable for your exam. Otherwise, why they have given a supplementary paper? You understood? So they will know. When they will know? On the date of exam, when they see the question paper, they will know the pain of it. Okay. So that's why I request you to please enlighten your known circle that this is relevant. Whatever I am discussing is really relevant. And while discussing Mighty 50 also, I am not wasting your time. I am connecting the concept. I'm discussing the concept and I am explaining from there. At least those concepts if you learn, the same question if it is coming, you will be able to answer. Little bit if they tweak also, you will be able to answer. That's the objective, okay. And those who are watching in online also or recorder also, please put the comment that it is relevant so that the others will get benefit out of it, okay, fine. Now, if it is erroneous refund, same story. If it is erroneous refund, then what we need to do? If it is erroneous refund, we don't have to check the due date of annual return. Directly from the date of erroneous refund, the show cause notice. Directly from this show cause notice and then demand order. Directly from the show cause notice and then demand order. What is the time limit within which it should be given? Same, 42 months. Difference enappa? What is the difference? In the previous case, we need to see the due date of annual return from their 42 months, but here we need to see just the date of erroneous refund from their 42 months. That is the difference, okay. And here it will be 12 months and this can be extended for a further period of 6 months, okay. Next, so all these points we have discussed, we have covered this. Next, you look into this 9. 9th also we discussed, 10, subsection 10, where the proper officer is of the opinion that amount paid under clause 1 of subsection 8 or 1 of 9 falls short of the amount actually payable, he shall proceed to issue the notice in respect of such amount which falls short. You ask me one doubt, what if some amount is partially paid? Now the notice and order is only for the differential amount. That is simple, logical, correct. Already I paid some amount, but the difference amount only they will give notice. Next, notwithstanding anything contained in clause 1 or clause 2 of subsection 8, penalty under clause 1 of subsection 5 shall be payable where any amount of self-assessed tax or any amount of as collected as tax has not paid within a period of 30 days from the due date of payment of tax. It's amazing point. Here we have a discount offer now. Here we have a discount offer. This discount offer is not applicable. This discount offer is not applicable. When this discount offer is not applicable? When this discount offer is not applicable? If self-assessed tax or amount collected as tax not paid within 30 days. Is it clear? What is self-assessed tax? Self-assessed tax means that tax which is reported in GST 1 but not paid in 3B is known as self-assessed tax. I am reporting in 1 but I have not paid in 3B, and amount collected as tax. In these two cases we will not get this benefit, okay. So you write down that last, benefit of reduced penalty as above. Benefit of reduced penalty as above. Reduced penalty as above is not applicable. Benefit of reduced penalty as above is not applicable in case of self-assessed tax not paid, self-assessed tax not paid. What is self-assessed tax means? Tax reported in GST 1 but not paid in 3B. But not paid in 3B, GST 3B. So benefit of reduced penalty as above is not applicable in case of self-assessed tax not paid or collected an amount as tax. Collected an amount as tax and not paid within how many days? Within 30 days from due date. From due date. Within 30 days from due date, if you are not paying, then the benefit of reduced penalty is not applicable, okay. Means you have to pay original penalty, whatever we have computed. Don't apply there. before notice, within 30 days from notice, within 60 days from order, 60 days from notice. This table you don't have to apply. This table you don't have to apply. You have to go by the normal penalty. Whatever is a normal penalty, that is only payable. Okay. Done. Then next, say this. So the provisions of this section will be applicable for determination of tax for the financial year 24-25 onwards. Okay. Then all the proceedings in respect of the said notice, etc. and all these things we have seen. This they have explained in detail. We discussed all these things. They have explained in detail with some numbers. Okay. So but we can understand that there is nothing great in this. So now we will solve this question using 74A. Okay, this question we will solve using 74A, and the answer for this question I have given as per 74. You kindly update it based on 74A. Okay, so say this. Discuss the amount of tax and penalty to be paid, if any, in the following independent cases where show cause notice are issued under section 74A. Under section 74A of CGST Act 2017. Date on which credit was wrongly availed is 31st January 2019. Amount of input tax credit taken wrongly 200. Adjudication order passed on 26th July demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty. In all cases, assessee want to pay the amount on 29/2021. Order passed, order not passed. Order passed. When order is passed, okay, so entire amount of credit, what is the time limit within which they have to pay? 60 days, correct? Is it 60 days? 26th July to 29, is it 60 days? Yes, July, August, September. So you count 26 July. In July we have only 5 days. August we have 31 days. September we have 20 days. So total how many days? So it is within 60 days. Correct? Now, is it on account of fraud or is it on account of other than fraud? So here nothing is given, which means it is on account of other than fraud. If it is fraud, they would have specified. If it is other than fraud, what is the provision we learned? Within 60 days from order, we don't have. So see this, see this, see this. Within 60 days from order, but actually it should be paid within 60 days from notice. Then only there is no penalty, otherwise we need to pay the original penalty. Correct? So therefore this particular question you kindly make note in your notebook. Okay, somewhere we will do the same question as per other than fraud as well as fraud. Okay. So answer to question number 37. Answer to question number 37 in Mighty 50. So this question we will do under both. We will do under both the cases. What is that both the cases? Fraud as well as non-fraud. Okay. So on account of fraud, not on account of fraud. Okay. So this question actually they have given a clue that it is on account of fraud. How you know? Penalty something they have given na, entire amount of credit, an amount equal to, imposing an amount equal to credit as penalty, like that, but we are answering as per both, just to understand. Okay, now tell me, in the first case, when the payment is made, in the first case, when the payment is made in the first case, within 60 days from order, correct? So first case, amount to be paid within 60 days, from order. If it is on account of fraud, how much will be the penalty? 50% of, you check the table and answer, 50% of original penalty. What is the original penalty? So 50% of original penalty, so that is 200 lakhs into 50%, that will come to 100 lakhs. Penalty, only penalty. If it is not on account of fraud, so penalty payable, full penalty payable, normal penalty payable. What is it? Normal penalty payable. Normal penalty payable. So what is the ITC evaded? 200 lakhs. 200 lakhs into 10%. That will come to 20 lakhs. Next. See the second situation. What is the second situation? 30th June 2019, adjudication order passed on 26th August 2021, demanding the entire amount of credit with interest and imposing an amount equal to credit as penalty. Order date 26th August. When are they making the payment? 20th of September. Is it within 60 days? Yes, definitely within 60 days. So because August few days and September 20 days only, again it is within 60 days. So same as above. Second case, amount to be paid within 60 days from order. Amount to be paid within 60 days from order on account of fraud. How much? 50% of original penalty. 50% of original penalty. What is the original penalty? 250 lakhs. 250 lakhs into 50%, that will come to 125 lakhs. Whereas here, normal penalty payable. See, the benefit is not there for other than fraud. Other than fraud, only 2 points. Before notice, within 60 days from notice. So normal penalty payable. What is it? Normal penalty payable, that will be 250 lakhs into 10%, that will come to 25 lakhs. Then third situation, 30th October is the ITC avail. Show cause notice has been issued on 5th September, demanding the entire amount of credit with interest and proposing penalty equals to 100% of credit taken. Now 5th September, 20th September, so they are making payment within 60 days from show cause notice, correct? So then in other than fraud, there is no penalty, correct? They are paying within 60 days from show cause notice. Check the table. They are paying within 60 days from show cause notice. In case of other than fraud, there is no penalty. Got it? If it is fraud, 60 days from show cause notice, how much they need to pay as penalty? 60 days from notice, 25%, correct? So therefore, third case, it is amount to be paid amount to be paid, because in all these cases they wanted to pay accordingly, correct? One date they have given, amount to be paid within 60 days, within 60 days from show cause notice. If it is fraud case, if it is fraud on account of fraud, 25% of original penalty. We need to pay 25% of original penalty. What is the original penalty? Total amount is how much? 120 lakhs into 25%. How much it comes to? 30 lakhs. Whereas here, no penalty. No penalty, because the payment is made within 60 days from show cause notice. Previously it was 30 days. Now they have modified it to 60 days. Okay. Then next situation. Next situation is that 30th January 50 lakhs statement of managing director has been recorded on 6th September, wherein he has admitted the non-receipt of the inputs and availing the credit wrongly, which means no notice. No notice, no notice. So before notice itself they are paying, correct? Notice is not given, no notice. Before notice itself they paid. If it is fraud case, how much we need to pay? 15%. If it is other than fraud case, no penalty. Okay. So fourth situation, amount to be paid before notice. Amount to be paid before show cause notice. Amount to be paid before show cause notice. How much will be the penalty? In this case, 15% of original penalty. What is 15% of original penalty? Total 50 lakhs. 50 lakhs into 15%, that is 7.5 lakhs. If it is this case, there is no penalty. Very, very important question, pa. This is purely on the table. Okay. So there is a chance of asking this type of question. Completely 73, 74, both places they revised to 60 days. Everywhere. This is what I have written. Maybe you have not listened to that. Fully they have changed. So fully the process is now merged to one. 74A. In that time limits and all they have changed. And this 60 days time limit is now common. So for 73 cases, 74 cases. There is no 73, 74 now. Okay. Next. Understood, Napa? Can I proceed? So for this question alone, I have given the updated answer. That updated answer I will modify in this and I will upload the file again. Okay. But anyhow, you have written for others. Then next one, and even this working PDF also I will share today. Today I will share, because all the concepts I am writing in the same PDF. Everything gets over, I will share with you. Okay. Then look into question number 38. Adinath Private Limited, registered under GST in the state of Uttar Pradesh, instructed Ashok Transporters to deliver certain taxable goods to Mahavir Enterprises in Uttar Pradesh on 10 January 2022. The value of the goods is 6,80,000, which are chargeable to CGST and SGST at 9% each. While the goods were in transit, proper officer intercepted the goods and the truck in which the goods were being transported under section 68. So this is proper officer under section 68 can intercept the vehicle which is in the transit. However, the driver of the truck failed to tender any document in relation to the goods in movement. The proper officer, after conducting the physical verification of the goods on the truck, decided to seize the goods and the truck and issued a notice under section 129 specifying the penalty payable. Yes. So penalty will be payable under 129. So they will first do the seizure and thereafter they will give a notice for levying the penalty, and within 7 days they will be levying the penalty order. After penalty order, within 15 days, if you pay the penalty, the goods and the truck will be released. Okay. So, specifying the penalty payable by Adinath Private Limited after giving it an opportunity of being heard. You are required to determine the amount of penalty payable under CGST Act if Adinath Private Limited does not come forward for payment of penalty. Further discuss the suitable course of action for Ashok Transporters if it intends to get the truck released. So, we will see the relevant provision for this. So, kindly look into page 258 in your book. Kindly look into page 258 in your book. Okay. And so, this book, actually I already told you that if any of your friends wanted this book, they can come to our office and they can collect this book free of cost, because next attempt there we are publishing a new book. There are a lot of amendments. So, this book, rather than throwing away, I just wanted to give it for those who wanted to make use of it for that purpose. Okay. And suppose if you are in online etc. and all, you can just contact our office, just the courier charges alone you pay, they will send the book. Then see this. Now, that is the disadvantage with IDT, every 6 months it will change. Okay. Then see this. Interception of conveyance by the proper officer. There are two things: goods with documents and goods without documents. If there are some goods with documents, there is no seizure. If there are goods without documents, then seizure of goods and conveyance. Seizure will be under section 68. Within 7 days, when they seize, they have to give a notice for levying penalty. After they give notice for levying penalty, within 7 days, they need to pass a penalty order. And how much is the penalty that is payable? Now, depends on goods and on conveyance. First, for goods, you see, how much is the penalty payable for goods? Whether the owner is coming forward or the owner is not coming forward to pay the penalty. The owner of such goods is coming forward. If the owner of such goods is not coming forward to pay penalty, then who is coming forward to pay penalty? The transporter is coming forward to pay the penalty. Is it clear? Now, how much will be the penalty if the owner is coming forward? If owner is coming forward, 200% of tax is the penalty. See there. If owner is coming forward, 200% of tax will be payable as a penalty. What if owner is not coming forward? If owner is not coming forward, 200% of tax or 50% of value, whichever is higher, will be taken as the penalty. This is for taxable goods. What if it is exempted goods? If it is exempted goods, 2% of the value or 25,000, whichever is lower. So, 2% of value or 25,000, whichever is lower, if the owner is coming forward. If the owner is not coming forward, 5% of value or 25,000, whichever is lower. So, the maximum amount is only 25,000 if it is exempted goods. Sir, for exempted goods also documents are required? Yes. Bill of supply and other documents are required even for exempted goods. Okay. Then, what is the penalty payable for the conveyance, to release the conveyance? Whatever penalty that is payable for release of goods or 1 lakh, whichever is lower. So, therefore, what is the maximum penalty for release of conveyance? Only 1 lakh. Only 1 lakh. Now, applying this chart, we are going to solve this question. Now, look into the question. Whether owner is coming forward or owner is not coming forward, last paragraph it is given. If Adinath Private Limited does not come forward for payment of penalty, then how much will be the penalty payable? 200% of tax. What is 200% of tax? 6,80,000 into 6,80,000 into 9%. First we will do as per CGST, because I have given CGST as GST separately. So, CGST we will take 6,80,000 into 9% into 200% or 50% of value. What is 50% of value? 6,80,000 half, that is 3,40,000, whichever is higher. Which is higher? Definitely 3,40,000 is only higher. This is the penalty under CGST Act. The same penalty will be payable under SGST Act also. Okay, but you do in exam only computation for CGST Act, that is sufficient. I told you, CMA final exam, they are asking only computation of CGST Act, you do only as per CGST Act. Suppose if they ask IGST Act, multiply by 2. Whatever penalty you got, if they ask IGST, multiply by 2, but they are not asking, they are asking only as per CGST Act. You do as per CGST Act 3,40,000. So 3,40,000 is the penalty payable for release of goods. What is the penalty for release of conveyance? Whatever penalty for release of goods, 3,40,000 or 1,00,000, whichever is lower. So maximum penalty for release of conveyance will be 1,00,000. So hence Ashok Transporters can get its truck released upon payment of 1,00,000. Got it? Next. Question number 39. In an order passed dated 1st April 2023. So this is related to pre-deposit. For pre-deposit also there is some amendment, I think. So one second, let's see this. So pre-deposit, previously there was a different provision and now they have modified little bit. Okay. So look into the pre-deposit provision first. As per section 106, no appeal shall be filed unless the appellant has paid in full such amount of tax, interest, fine. Whenever we are going for appeal, why we go for appeal? So the department officer passed an order and you are of the opinion that you don't have to pay, but you wanted to prove that you don't have to pay. So you go for the appeal to the first appeal authority. When you go for the first appeal authority, so you have to pay a pre-deposit. How much is that pre-deposit? If you have any admitted due, pay the admitted due full. What is admitted due? For example, department is asking you to pay 100 lakhs as tax and applicable interest and penalty. According to you, you have to pay only 30 lakhs. According to you. So pay that 30 lakhs plus its interest plus its penalty. What is the disputed tax? 70 lakhs. 100 lakhs, 30 lakhs is admitted. What is disputed? 70 lakhs. In that 70 lakhs, we need to pay 10%. Okay. In that, we need to pay 10%. What is 70 lakhs into 10%? 7 lakhs. This 7 lakhs is subject to maximum previously 25 crores. Now they have reduced it to 20 crores. Got it? They have reduced it to 20 crores. So therefore, if we take, say for example, 400 crores is the order on which you go for appeal. What is the disputed tax? Entire 400 crores. 400 crores into 10%, 40 crores. But maximum is how much? 20 crores only. So 20 crores only you need to pay as pre-deposit. Is it clear, pa? Understood? Sir, is this 20 crore under CGST or total? Under CGST means again under SGST we need to pay 20 crores. Okay. There are 3 places where you need to do the computation separately. Penalty. So for Visana, penalty computation. Number 2, late fee. So usually late fee computation also will be there, that late fee and pre-deposit. These 3 places we need to do the computation separately. For CGST, separately for SGST, and total and write if it is IGST. Otherwise just the CGST provisions you need to write. Okay. Now this is for the first appeal, pa. What is the pre-deposit for second appeal? Pre-deposit for the second appeal, previously second appeal is to whom? GST 80, appellate tribunal. Previously it was 20%, now they reduced it to 10%. Now first appeal also 10%, second appeal also 10%. First appeal, what is the maximum? 20 crores, and second appeal they are telling that the maximum is only 20 crores. You understood? So therefore they have changed this 50 crore. Previously it was 50, now they have modified it to 20 crores. Is it clear? So therefore 40 crore will be in total, 20 under CGST, 20 under SGST. Okay. So this is what you need to remember. Now there is no difference in the pre-deposit for first appeal and second appeal. Both the cases the pre-deposit will be same. Okay. So maximum 40 crores. So write down, this is another amendment. Amendment number 58. This time the number of amendments for CMA is more than CA. For CA it was hardly 41 or 42 amendments. See, we are touching 58. Okay. Then see this. and that's mainly because of that 1 month gap. Okay, pre-deposit in case of first appeal to commissioner appeals, first appeal to commissioner appeals, and second appeal to GST-80. Pre-deposit in case of first appeal to commissioner appeals and second appeal to GST-80. What is the pre-deposit? 100% of admitted due. 100% of admitted due. This is always payable pa. 100% of admitted due. What is admitted due? That is tax plus interest plus penalty. TIP, tax, interest, penalty, that you have to pay anyhow. And second, 10% of disputed tax, not due, disputed tax, only tax. Okay, but this 10% of disputed tax is subject to maximum, how much? 20 crore under CGST. If it is IGST, 40 crore under IGST. But this 10% component only subject to maximum 20 crores. Okay. SGST they will not ask. They will ask only CGST. If they ask IGST, whatever you do for CGST, multiply by 2. Okay. CGST. If the question is silent, always CGST. Always CGST. That's what I told. For CMA final exam, they will never ask CGST also. They will just ask penalty. You do as per CGST only. They will never mention the act. They will mention how much is the penalty payable. You write only CGST provisions. Okay. And from this attempt onwards, I am planning to put the suggested answers also. Like once the exam get over, send me in Telegram group a question paper. I will do the suggested answer and let the suggested answer be forwarded to the examination department. Okay, so that they will know, okay, what are all the assumptions which are possible. So far I have not done, seriously I have not done. I thought why should I think, etc. and all. Then I saw many mistakes in the suggested answers. So I thought, okay, someone should highlight this. Okay. Now look into this question, question number 13.9. You understood now that pre-deposit amendment. In an order passed dated 1st April 2023 issued to Sitaram Private Limited, the Commissioner of Central Tax being Revision Authority has confirmed IGST demand of 1400 crore, penalty of 200 crore and interest of 20 crore. Sitaram Private Limited admits the tax liability, penalty and interest to the extent of 200 crore, 20 crore and 10 crore respectively, but wishes to litigate the balance amount of demand, and thus Sitaram Private Limited deposits the required amount of pre-deposit on 12th April and files an appeal with GST-80. So how much will be the pre-deposit? Total how much per IGST? Here they gave IGST. Total how much? 1400, 200 and 20. In that how much they are admitting? 200 crore. Means accordingly the applicable penalty, interest also they need to pay. Correct? How much is the admitted due? 230 crores. What is the disputed tax? Disputed tax 1400 minus 200. How much? 1200. 1200 into 10% is how much? 120. But maximum will be only 40 because it is IGST. Because it is IGST, subject to maximum 40. See the answer. The amount of pre-deposit to be made. First one no change, 230. Then next one it will be 10% of the remaining tax in dispute. that is 10% of 1200 crore, 120 crore, subject to maximum 40 crores. So therefore, we need to pay a pre-deposit of only 40 crores. Only 40 crores will be the pre-deposit. We are answering the question as per the updated provision. It was an old exam question. Old exam question, if they give today, what should we do? We are writing as per the latest amendment. Year and all don't see there, don't bother about year. We are writing the question like, see, I have not created a question now. Already some past exam question, it's a past exam question. We are answering as per latest amendment, okay. Next, here there is one more. GST 80 decides the appeal in favor of Sitaram Private Limited on 12th June. Sitaram Private Limited submits an application seeking refund of pre-deposit along with applicable interest on 2nd July 2023, and the department acknowledges the application on the same day. The amount of pre-deposit is refunded to Sitaram Private Limited on 15th October. Listen, whenever we deposit the money, pre-deposit, and we win the case, that 40 crore we deposited, now that we should get as a refund. What is the rate of interest in this case? 9%. Generally, refund interest rate is 6%. But in this case of pre-deposit, the refund interest rate is 9%. That too, from when to when it will be computed? Not 60 days from the date of application. Usually refund is, first we need to make application, then 60 days. But in this case, not like that. From the date we made the pre-deposit till the date we are getting the pre-deposit, for every day we get the interest. What is the date on which we deposited? See there, what is the date on which we deposited? Pre-deposit on 12th April 2023. 12th April 2023. Now take your calculator, count from 13th. Don't count 12th, that is the date you deposited. Immediately thereafter it will start. So the next day. So in April, 30 minus 12. 30 minus 12. Plus May 31 days, June 30 days, July 31 days, August 31 days, September 30 days, October 15 days. How many days? 186 days. See the answer here. Interest will be 40 crores into 9%. 9% is the rate of interest into 186 divided by 366. How much? Sir, but on this 230 crore, why there is no interest, sir? That 230 crore anyhow you have to pay. Dispute only you will win. 230, anyhow you admitted that you have to pay, that is your liability. Dispute is only on 1200. For that only, whatever pre-deposit you made, that you will get as a refund. Is it clear? So, please do the computation. 40 crores into 9% into 186 by 366. Why 366 I have taken? So, like 365 itself we can take. Maybe if it is given in 2024, you can take it as 366, otherwise it's 365. Please do the computation. 40 crore into 9% into 186 by 365. How much? Hmm? 1,83,45,205. Okay. So this is the answer. 1,83,45,205. Done. Next. Next we are moving on to advanced ruling, question number 40. Ranjan intends to start selling goods in Delhi. However, he is not able to determine the classification of goods proposed to be supplied by him, as the classification of the said goods have been continuous, and the place of supply if we supply the said goods from Delhi to buyers in US. So advanced ruling, there are certain questions on which we can seek advanced ruling. What are those questions? All questions starting from supply chapter to registration chapter. Just open your book, see the index, supply chapter to registration chapter. Okay, tell me once, what are the headings? Supply, next levy and collection under CGST, levy and collection under IGST, then exemptions, time of supply, place of supply, value of supply, Input tax credit, composition scheme. Next. No, up to composition scheme, including registration. Up to composition scheme, including registration, but excluding place of supply. Is it clear? So for registration, you don't have in syllabus, but for registration, we can go for advanced ruling. Is it clear? All chapters what you have up to composition scheme. Registration also you can go for advanced ruling. But out of these chapters, on which chapter you cannot go for advanced ruling? Place of supply. Okay, come back to this. Classification of goods. Is it a question for advanced ruling? Yes. Classification means what? Classifying intrastate or interstate or supply of goods or supply of service, etc. So supply of goods or supply of service classification, we can definitely go for advanced ruling, but place of supply we cannot go for advanced ruling. Strictly not allowed. Ranjan's tax advisor has advised him to apply for advanced ruling in respect of these issues. He told Ranjan that the advanced ruling would bring him certainty and transparency in respect of the said issues and would avoid litigation later. Ranjan agreed with his view but has some apprehensions. In view of the information given above, you are required to advise Ranjan with respect to the following. The tax advisor asked Ranjan to get registered under GST before applying for the advanced ruling, as only registered person can apply for the same. False pa. Any person can go for advanced ruling. Advanced ruling is whenever you have a doubt and you need a clarity about it, you can ask the department. There is authority called as advanced ruling authority. Whether a said transaction is supply or not a supply, can it take ITC or not, like that, you can ask the questions to them. That can be asked by any person, whether a registered person or an unregistered person who is desirous of obtaining registration, any person. Then, number 2, Ranjan is apprehensive that if at all advanced ruling is permitted to be sought, he has to seek it every year. Whether Ranjan's apprehension is correct? No, no. Advanced ruling once obtained will be valid till the time there is a change in the change in that section, change in the provision of that section. Okay. For example, section 7 is supply. You got the advanced ruling. Now, if section 7 is not amended, till the time there is no amendment in section 7, the advanced ruling will be valid. If there is any change in section 7, means amendment has taken place, then only we need to go for new advanced ruling. Otherwise, the advanced ruling obtained will be valid till the time there is no change in law. Got it? Next. The tax advisor is of the view that the order of advanced ruling is final and not appealable. Whether the tax advisor view is correct? No. Authority for advanced ruling can be appealed to appellate authority for advanced ruling. We have WR and RRR. WR is authority for advanced ruling. RRR is appellate authority for advanced ruling. Definitely we can go for appellate authority for advanced ruling. Okay. Next. Shambhav, Ranjan's friend, is a supplier registered in Delhi. He is engaged in supply of goods which Ranjan proposes to supply at the same commercial level that Ranjan proposes to adopt. He intends to apply the classification of the goods as decided in the advanced ruling to be obtained by Ranjan to the goods supplied by him in Delhi. Whether Shambhav can do so? No. Because advanced ruling obtained is binding only on the applicant and the department, not on any other person. Even though the facts of the case is same, so even though in this case Shambhav's facts of the case is same as Ranjan, but Shambhav cannot rely upon the advanced ruling obtained by Ranjan. Even Ranjan cannot use the same advanced ruling in another state. He cannot use it in another state because advanced ruling obtained in a state will be valid in that state. He cannot use it in another state, and another person cannot use in this state itself. Got it? So because it is binding only on applicant in that state plus department. Okay. Subject to state and applicant, yes, that's what, binding only on them. So advanced ruling is binding only on the applicant who sought it and the concerned officer or the jurisdictional officer. This implies that advanced ruling is not applicable to similarly placed another taxable person in the state. It is only limited to the person who has applied for an advanced ruling. Okay, but this is the mistake what your CMA study material has. In your CMA study material, they have given lot of advanced rulings, which is of no use, because those advanced rulings are applicable only to those people. I don't know why they have given. they lost this simple logic. In your study material, they gave n number of advanced rulings. You know that? Your study material, once you scroll through, lot of advanced rulings they have given. But unfortunately, those advanced rulings are binding only on those companies for which it is given. It is not applicable for others. Thus, those are not case laws. Those are not like High Court judgments or Supreme Court judgments and all. So unnecessarily they give, because of which the book size has increased. Okay, maybe they would have offered to one person to prepare a study material. They would have paid per page 10 rupees. We will give you. You prepare and give study material. Whatever is available in Google, everything has put, and they have given. Okay, but advanced rulings are not applicable for you actually. Now with this, we completed GST related mighty 50 questions. So in that 40 questions are related to GST, and we are now moving on to customs related questions. The remaining 10 questions is on customs. Have a look into question number 41, and for you, we don't you don't have the basic concepts. So you have mainly valuation, as I told you, valuation, procedures, and then warehousing. These kind of topics are there. So that's why I have taken from there only. In valuation mainly, there is one rule called as computed value method and another rule, deductive value method. These are the two methods which is important at CMA final level. Okay, so this is one question based on computed value method. What is the difference between computed value method and deductive value method? First we will discuss that, and then we will come back to this question. You take your book. In your book, you can see at the end I have given the customs portion. Check page number 306. Check page number 306. You can find deductive value method. What is this deductive value method means? Usually we take the price in India. See, we should ascertain the price at the time of import. That price at the time of import will be taken as the value for payment of customs duty. And in that we have various methods when buyer and seller are related and price is not the sole consideration. So we have various methods. All these methods you can remember with TIS DCR. T for first transaction value. That is, if buyer and seller are related, that is importer and exporter are not related, and price is the sole consideration, then we go by transaction value. Otherwise, we determine the value as per rules. In that ISDCR, I for identical goods, and S for similar goods, D for deductive value, C for computed value, R for residual value. You can see that information of TIS DCR in page number 303. I have given there. So first we need to take the transaction value. If the transaction value fails, we need to determine the value of identical goods. If that identical goods also fails, then we need to take similar goods. If that similar goods also fails, then deductive value, and then computed value, and then residual value. But between deductive value and computed value, you can choose anything. Okay, so not necessary that first we need to apply deductive value, then only computed value, not like that. Between deductive value and computed value, the importer can choose. These are the different methods of valuation in case of imports. In that, we are discussing now what is deductive value. Logic simple. I need the price prevailing at the time of importation. So I see the selling price in India after importation. I have imported and the price is, and a product is being sold. So I take the selling price and do the back working. I do the reverse working, go back and arrive at the price at the time of import. For example, I am an importer who is importing from USA, and these goods are coming to India, and in India I kept the goods in a warehouse, and thereafter I am selling the goods in the from the warehouse at say 7,000 rupees. What is the price at which goods are sold after import? What is the price at which goods are sold after import? First level after importation, 7,000. Take that 7,000. That 7,000 is already excluding GST. If that 7,000 is including GST, take out that, because it is post import. From this 7,000, all post import expenses you need to reduce. All post import expenses. Now, is commission post import? Yes. Is general expenses post import? Yes. Profit also post import. Even storage charges also post import. Customs duty also post import. but insurance is pre-import. Okay, so you exclude, take your calculator, 7,000 minus 500 minus 100 minus 80 minus 20. Now you will get one value 6,250. That 6,250 will be taken as the deductive value. This is one way, deductive value method. Whereas another one is there, computed value method. What is that computed value method? Computed value method is like top down approach. That is, we see the cost data, cost of material, cost of labor, cost of expenses, overheads, etc. Then transportation cost, profit, then finally we arrive at the value. Got it? So you can see here computed value. In computed value, we'll take raw material cost, processing cost, usual profit and general expenses, and transportation cost from where to where? From there to here. So finally we get the computed value. That computed value will be 1,500 plus 500, 2,000 plus 200, 2,200. This is about computed value method. Is it clear, pa? So there are two methods, either deductive value method or computed value method. Now you can see this question. Mr. X imported certain goods from a related person, Mr. Paul of US, and the transaction value has been rejected. Rule 4 and Rule 5 of import valuation rules are found inapplicable as no similar identical goods are imported in India. Mr. X furnishes cost related data of imports and requests customs authorities to determine the value accordingly as per Rule 8. The relevant data are as under. So now we need to do the computed value method. Okay, first cost of materials incurred by Mr. Paul. So that will be taken. Then fabrication charges also cost, other chargeable expenses 400, other indirect cost and freight, loading. Normal net profit margin is 20% of FOB. If it is FOB sale price, 20% on sale price means on cost how much? 25%. Whatever they have given is 20% on sale price, pa. If it is on cost, it will be 25%. Okay. Then air freight. Air freight, we have one point. What is that? Actual or 20% of FOB, whichever is lower should be taken. Insurance, if actually is ascertainable, we will take actuals. Exchange rate given is 65 rupees per dollar. Now we will do computed value method. So first we will take 2,000, 1,000, 400, 250, 250, 100. You add everything. You will get one cost. What is the cost that you have got? $4,000 you will get. Check. 2,000 plus 1,000, 3,000 plus 400, 250, 250, 100. $4,000 is the cost. Now what is the profit? 20% of FOB. So that can be taken to 25% of cost. How, sir? Let FOB 100 and profit will be 20. Then cost will be 80. So if cost is 80 and profit is 20, what is 20 by 80? 20 by 80 will be 25%. Is it clear? So therefore 25% on cost. Now what is the cost? $4,000. $4,000 into 25% is what? 1,000. So therefore profit will be 1,000. Now when you add this, you will get FOB. So FOB will be $5,000. Now what is the air freight? Air freight is how much? Actuals 1,500 or 20% of FOB. 5,000 into 20%, whichever is lower will be 1,000. Now for CA final exam, one adjustment needs to be done. That adjustment is not applicable for you. CMA final, you do normally. What is that normal? Actual or 20% of FOB, whichever is lower will be 1,000. So just take that 1,000. Air freight 1,000. Air freight will be 1,000. And insurance, what will be the insurance in this case? 50. Insurance will be 50. So 5,000 plus 1,000, 6,000. So plus 50. 6,050 will be taken as the assessable value. Is it clear? Understood? 6,050 will be taken as assessable value in this case. So here it is given as 5,070 because I told you na that CA adjustment. So we should not do this adjustment for CMA final. We should just take whichever is lower. That whichever is lower is 1,000. So therefore the answer will be 6,050. 6,050 into 65. 6,050 into 65. How much 6,050 into 65? 3,93,250 will be taken. Okay. Kindly make the correction. So 1,000 should be added. this adjustment we should not make, we should just take whichever is lower, okay. Just take whichever is lower. This minus already considered in FOB, that adjustment not required. So only 1000 will be taken. Insurance actual asset attainable, we will take actuals. So assessable value will be 6050. Assessable value as per rule 8 will be like Indian rupees. So 3,93,250. Okay. And they have given one paragraph. Have a look into that paragraph. The customs authorities are of the opinion that since the value as per rule 7 can be determined at 4 lakh, there is no need to apply rule 8. Can the request of X be legally acceptable? Rule 7 is deductive value. As per deductive value, 4 lakhs is there. Computed value is 3,93,250. Which is lower? 3,93,250. So can they choose 3,93,250? Yes. Not necessary that they need to go for deductive value. I told you between deductive value and computed value they can choose. Okay. So that is up to this. We'll take a break and then we will see the remaining questions. Okay. More means we will go for deductive value itself. Suppose if deductive value is only 3,50,000, we go for deductive value 3,50,000. Between these two, computed value, deductive value, we can choose. But before applying these two, identical goods and similar goods should not be satisfied. Then only we will come here. So that's what in question itself they have given. Rule 4 and rule 5 are inapplicable. Rule 4 is identical goods, rule 5 is similar goods. Okay. we'll start. Look into question number 42. Mission Life, an NGO from Indore, Madhya Pradesh, has imported 800 metric tons of food products from Australia for free distribution to needy people in backward area of Sagar, Madhya Pradesh under a central government scheme. Exporter from Australia has charged only $20 per metric ton to cover cost towards freight, insurance, etc., and none towards cost of food products. So Customs Department found that at or about the same time of importation, following import of said food products of Australian origin have been made. So whenever we are importing goods from a particular country, and if the price is not ascertainable, then we go for identical goods. What is identical goods? Identical goods are also imported goods at or about the same time, and it should be same to same in all physical features and characteristics, imported from the same country and same producer preferably. Same producer is not mandatory, same producer preferably. So that is the meaning of identical goods. You can see here, identical goods means it is in page number 304. In your book you can see identical goods means imported goods having the same physical features, and quality, imported from the same country of production, same producer preferably, then it will be called as identical goods. If it is identical goods, so then we will take the value of that identical goods, and if we have more than one identical goods, we see the lowest of such value. Okay, but while doing the identical goods, the least quantities and all should not be taken, because comparable quantity should be more or less the same. But if it is like completely meager, small quantities, that should not be taken into account. So coming back to this, here how many metric tons we imported? 800 metric tons. Compared to 800 metric tons, this 40 metric tons and 100 metric tons are too less. So therefore we take only these, and here we have more than one identical goods. We have total 4 identical goods. But if you have more than one identical goods, which should be taken? The lowest should be taken. What is the lowest? 160. So 160 should be taken as the answer in this case. So 800 metric tons into $160 will be taken as the value. Is it clear? Got the clarity? That is in case of identical goods. Then question number 43. Paramjit Limited imported a machine from Oliver Equipments UK. The FOB price of the machine was settled at 6,000 UK pounds. The machine was shipped on 1/10/2023. Meanwhile, Paramjit Limited renegotiated the price of the machine with Oliver Equipments, which agrees on the reduced price of 5,000 UK pounds on 10/10/2023. The machine arrived in India on 18/10/2023. All other details pertaining to the machine are as under. So what is the negotiated price? What is the negotiated price? 5,000 UK pounds. Even though the initial price was 6,000, but renegotiated, what is the price prevailing at the time and place of importation? 5,000. Even though it was 6,000 in invoice, but he is going to pay only $5,000. So there are 5,000 pounds. So 5,000 UK pounds will be taken as the FOB price. Then to this FOB price, we need to make certain adjustments. See this. License fee that the buyer was required to pay in UK as a condition of sale. So all pre-import expenses should be added to the value. It's a pre-import expense because it is payable by buyer to the seller before import itself. So therefore this 500 UK pounds should be added. Buying commission, no, buying commission will not come. Only selling commission will come, that too paid by the importer on behalf of exporter. Buying commission is a commission paid by the importer to his agent. That will not be included in the value. Only selling commission will come. Due to deep drought at the port, machine was not taken to the jetty in the port, but was unloaded at an outer anchorage. The charges incurred for such unloading and transportation of machine from outer anchorage to the jetty in barges, that is small boats, were rupees 50,000. So that 50,000 will be taken as the transportation cost, okay, freight cost. Date of presentation of bill of entry was 15/10, and the rate of exchange notified by CBIC on this date was 100 rupees per pound, and date of entry inwards was 18/10, and the rate of exchange notified by CBIC on this date was 105. Rate of basic customs duty 15%. Tell me which rate should be taken. For exchange rate, always it is date of bill of entry. bill of entry date only should be taken for exchange rate. What is the bill of entry date? 1510. So as on 1510, what is the exchange rate? 100 rupees per pound, that should be taken. But for rate of duty, date of presentation of bill of entry or entry inwards, whichever is later. So here bill of entry is 1510 and entry inwards is 1810, whichever is later is 1810. So therefore 15% should be taken as the rate of customs duty in this case. Then insurance premium details were not ascertainable. When insurance is not ascertainable, we need to take 1.125% of FOB. Okay, and nowhere in the question it is given that freight is not ascertainable. If the question says freight is not ascertainable, then we need to take 20% of FOB. But here they gave freight. What is that freight? Only 50,000 rupees will be taken as the freight, because light rate charges, bar charges, all cost incurred up to the port of importation will be part of freight. Okay, so now in this case 5,000 pounds into 100 rupees per pound, so that will be taken as the value. So 5,000 into 100 is how much? 5 lakhs. Same way, this 500 UK pounds into 100, 50,000. So 5 lakh 50,000. Understood? Then buying commission will not come, and barge charges, that is transportation cost. Insurance will be 1.125% of 5 lakh 50,000. If you add, you will get the assessable value. On that assessable value, what is the basic customs duty to be taken? 15%. So 15% will be taken as the basic customs duty on that. Okay, and suppose if they give social welfare surcharge, that also should be added. If they give IGST, while doing IGST, everything we should add: assessable value, basic customs duty, social welfare surcharge. Finally, we need to compute IGST. Next, look into the another question, question number 44. Calculate the assessable value rounded off to nearest 1 rupee under the Customs Act 1962 with appropriate working notes from the following particulars related to import of a machine by sea by Daksh Industries from USA in the month of October 2023. Cost of machine at the port of exportation, that is FOB price. What is the FOB price? $8,200. Freight from exporter's port to port of import 1,800. What freight? Sea freight or air freight? Sea freight. We will take actuals. If it is air freight only, we will compare with actual or 20% FOB, whichever is lower. So it is actuals, we will take actuals. Daksh Industries has paid to seller the cost for packing, not as a condition of sale, but including the cost of machine. So cost of packing will definitely be added. Okay. Then actual selling commission paid by Daksh Industries to local agent of exporter, local agent commission. That local agent commission also will be included, because who is local agent? Exporter's agent. Actually, who should pay? Exporter should pay, but importer is paying, means it's an indirect consideration to the exporter. Then actual insurance charges paid are not ascertainable. Not ascertainable means we need to take 1.125% of FOB. But which FOB? Revised FOB. First we need to see the FOB given, make the adjustments and get the revised FOB. On that we need to compute freight and insurance. Okay. Then ship demurrage charges paid by Daksh Industries at port of importation, that is also part of freight. There are two types of demurrage charges: ship demurrage charges and demurrage charges. Ship demurrage charges will be paid by the person in charge of the conveyance for anchoring the ship at an outer jetty. Okay. Whereas normal demurrage charges will be payable by the importer for not clearing the goods within the permissible time. As demurrage charges are payable after importation, it will not be included in value, but ship demurrage charges will be included in the value because it will be paid before importation. Is it clear? Then, so this will be part of freight. Engineering charges paid by Daksh Industries to consultancy firm in Mumbai as a condition of sale. Generally, all expenses paid outside India only will be included. If any expenditure is paid in India, that will not be included in the value. Got it? Then accordingly, first we need to take 8,200. 8,200 into, so we have exchange rate 80. So 8,200 into 80 is how much? 6,56,000. And then add local agents commission. What is the local agents commission? 20,000. Why this packing cost will not be included? Because it is already included. See, it is to be included in the question. It is in the given price. It is already included. So that's why we are not adding anything. So except freight and insurance, everything you make the adjustment pa. Okay. So this we have adjusted, this also we have adjusted, and engineering charges will not be included. So now you will get the revised FOB. So what is the revised FOB or FOB as per customs? 6,76,000 on that freight. In freight, we need to take 1,800 pounds or $1,800 into 80 plus even ship demurrage charges also will be part of freight, and then insurance will take 1.15% of 6,76,000. So you get the assessable value. Understood? Why engineering charges will not be included? See, if there is any intangibles which are procured in India, that will not be included. Okay, if it is procured outside India and used in imported goods, then only it will be included. That is with respect to this. So then look into question number 45. Mr. X, a chemical manufacturer, imports a machine from Germany on 12 January 2019 for rupees 20 lakhs. Mr. X is eligible for concessional rate of customs duty on capital goods imported by him, subject to the condition that he follows customs import of goods at concessional rate of duty rules. We have these rules. So these rules are there in your syllabus. Import of goods at concessional rate of duty rules, and as per these rules, if any capital goods are imported either without payment of customs duty or at concessional rate, and if it is sold in India after usage, depending upon the depreciable value, we need to pay the customs duty along with interest. What is the depreciable value? While doing the depreciation, we need to follow a different method. That is, for every quarter or part thereof in the first year, it will be 4%. For every quarter or part thereof in the second year and third year, it will be 3%. For every quarter or part thereof in the fourth and fifth year, it will be 2.5%. For every quarter or part thereof, thereafter, it will be 2%. We need to reduce. Okay. And we get the depreciable value. Now, if you observe here, when the machinery is put to use, 1st February 2019, means from 1st February 2019, we need to count the depreciation. Okay. On 5th April 2022, Mr. X wants to clear the machine for home consumption. Means, what is the number of years for which we need to compute? First, in the year 2019, all 4 quarters are covered up. All 4 quarters, that is February, Jan, Feb, March. So quarter or part thereof, calendar quarter we need to take. So first year is 2019. So for every quarter or part thereof in the first year, it will be 4%. Second year and third year, it will be 3%. Fourth and fifth year, it will be 2.5%, and thereafter it will be 2%. First year 2019, 4 quarters into 4, that is 16%. Then again 2020, because up to 2022, 2020 is second year, 21 is third year, 22 is only fourth year. Okay, so see this: first year, second year, third year, fourth year. For second year also, third year also same, 3%, 3%. So 12 and 12. For fourth year, up to April means what? Jan, Feb, March and April, 2 quarters. For the 2 quarters, we need to compute 2.5, that is 5%. Now you do the total of this: 16 plus 12 plus 12 plus 5. How much it will come to? 45%. So this 45% will be taken as the total depreciation. Is it clear? So what we need to do is that first we need to see the value of the capital goods. What is the value of the capital goods imported? 20 lakhs. What is its depreciable value? Minus 45%. See, 45% is depreciation. You reduce it. So therefore 20 lakhs minus 45%, how much it comes to? 9 lakhs will be taken as the depreciable value. No, minus 45% pa, 20 lakhs minus 45%. What is 20 lakhs minus 45%? Minus 45% means in calculator minus 45% you should do. Balance you need to tell. What is the balance? 11 lakhs. So 11 lakhs will be taken as the depreciable value. Are you understanding? Now on this 11 lakhs, we need to pay customs duty. How much customs duty we need to pay? What is the rate at which we have got basic customs duty? 20%. 11 lakhs into 20% is how much? 2,20,000. But what was the concessional duty which you have already paid at the time of import? 5% you have already paid on 20 lakhs. So the differential amount we need to pay now. So that is 11 lakhs into 20%, 2,20,000 minus at the time of import 20 lakhs into 5%, that will be 1 lakh. So remaining 1,20,000 we need to pay. Got it? And on the top of this we need to pay interest, but here they are asking us to ignore interest computation, otherwise we need to pay the interest. What is the rate at which we need to pay interest? 15% per annum we need to pay the interest. And the information related to this, import of goods at concessional rate of duty rules I have given. So you can see this in page number 327 of your book, page number 327, 328 and 329. You can see in 4 pages I have given, and this is given as a separate chapter in your study material. So therefore please go through this, and the revision video related to this is available in the CA final chapter 5's revision. So you can see those revision videos, there it is available. Okay, so you can just keep this book and you can do the revision video, so it will definitely be helpful, whichever chapter you feel like. But this is one chapter which you should definitely read, because it's a separate chapter in study material. You may get a question similar to this. This is one question related to import of goods at concessional rate of duty. Then look into question number 46. This question number 46 is related to baggage. After staying abroad for 16 months, Mr. Vasudev shifted his residence to India from Sydney to Kolkata on 12/10/2021. At the time of landing at Kolkata, he brought the following items: gold bars 30 grams valued at 90,000 rupees. So basically, in case of gold bars and all, we don't have the concessional rate. What is a baggage rate that is applicable? 38.5% is a baggage rate. But there are 3 goods for which 110% baggage rate will be applicable. What are those 3 goods? Firearms, cartridges of firearms exceeding 50, then cigarettes exceeding 100, cigars exceeding 25, and tobacco exceeding 125 grams. For these 3 list of goods, the rate will be 110%. Okay, and next, for gold bars, whether we get the rate 38.5 or 110%, 38.5, but we will not get the general free allowance. There are 6 goods for which general free allowance is not available. What are those 6 goods? These 3 goods: firearms, cartridges of firearms, cigarettes, that. Plus, next we have liquor, alcoholic liquor in excess of 2 liters, LED, LCD, plasma TV, then gold or silver in any form other than ornaments. Okay, for this, general free allowance is not available. You can just look into your book related to this information on baggage. So what are the goods for which we will not get general free allowance? Annexure 1 items, page number 340. Page number 340, Annexure 1 items, there won't be any general free allowance. What are they? Firearms, cartridges of firearms exceeding 50, cigarettes exceeding 100, cigars exceeding 25, tobacco exceeding 125 grams, then alcoholic liquor in excess of 2 liters, gold or silver in any form other than ornaments. For ornaments, general free allowance is available, but for gold or silver in any other form, that is gold bars, gold biscuits, etc. Then we have LED, LCD, plasma TV. These are the 6 goods for which general free allowance not available, means always baggage duty is payable. And in this also, for the first 3, the rate of duty applicable is 110%, and the next 3, the rate of duty will be 38.5%. Next, what is the general free allowance? What is the general free allowance? Simple pa. You remember it in 4 points. Point number 1, if the passenger is coming from other than Nepal, Bhutan, Myanmar, and if they are tourists of foreign origin, then it will be up to 15,000. In other cases, it will be up to 50,000. Okay, if they are coming from other than Nepal, Bhutan, Myanmar, tourist of foreign origin, up to 15,000. If they are other than tourist of foreign origin, it will be up to 50,000. Okay, this is the general free allowance. If they are coming from other than Nepal, Bhutan, Myanmar, if they are coming from Nepal, Bhutan, Myanmar, if they are coming by land route, there is no general free allowance. Other cases up to 15,000 is the general free allowance. Now coming back to this question, where is this person coming from? He is coming from Sydney, means other than Nepal, Bhutan, Myanmar, correct? Is he a tourist of foreign origin? No, he is an Indian. So therefore what will be the general free allowance? Up to 50,000. So in this case up to 50,000 will be general free allowance. And in the first case, GFA available or GFA not available? GFA not available. Then alcoholic liquor 4 liter valued at 10,000. So which case general free allowance is available? 2 liters general free allowance are available. Remaining 2 liters general free allowance is not available. 20 boxes of cigarettes, each box consisting 10 numbers. So 20 into 10 means 200 numbers. In that again 100 cigarettes general free allowance available, beyond 100. Because if you see annexure 1, only exceeding 100 not available, but up to 100 is available. And next, one notebook computer, one laptop, we have an exemption. Used personal effects is always exempted, and one laptop for a person more than 18 years of age is exempted. Okay, so one laptop is exempted, notebook or laptop computer is exempted. Then one PC meant for personal use, so personal computer is not exempted, that will be dutiable. And hand pistol will also be dutiable, and general free allowance is not available. Whenever we get a question like this related to baggage, you need to prepare it in a particular format. Okay, so you can just write down in your notebook as to how to present it. Okay, first you need to see particulars, and then eligible for GFA, next not eligible for GFA. When it is not eligible for general free allowance, again it is divided into at the rate of 38.5%, at the rate of 110%. But eligible for GFA, always the rate will be 38.5%. You need to present it like this, so that when you divide everything accordingly, it will become easy for you while arriving at the answer. Okay, particulars, eligible for GFA will always be at 38.5%, not eligible for GFA we have 2. What are the 6 articles not eligible for GFA? That annexure 1, but in that first 3 will be 110, remaining will be 38.5, that's why. Now what is the first article given in the question? Gold bars. Gold bars, is that gold bars eligible for GFA or not eligible for GFA? Not eligible for GFA. So it should go to not eligible for GFA column. In that again, what will be the rate at which we need to take? 38.5%. So what is the amount of gold bars? 90,000. You need to put it in this second column, 90,000. What is the next product? Alcoholic liquor. Alcoholic liquor, how much is eligible for GFA? 2 liters. Total how much is the value? Question, total how much is the value? 10,000. For 10,000 is for 4 liters. 2 liters eligible for GFA. So 5,000 rupees you keep it under eligible for GFA. 5,000 rupees you keep it under not eligible for GFA at 38.5%. Okay, next. What's next? 20 boxes of cigarettes. So cigarettes, how many cigarettes we are bringing? 200 cigarettes. What is the total value? Cigarettes value 4,000. In that 2,000 eligible for GFA, remaining 2,000 not eligible for GFA, but the rate will be 110%, not 38.5%. Cigarettes beyond 100, the rate will be 110%. Then what's next? Notebook computer. So notebook computer is exempted. Notebook computer is exempted. Then next, PC computer, that is dutiable. What is the value? 40,000, but that is eligible for GFA. Next. Hand pistol, eligible or not eligible for GFA? Not eligible for GFA. So it should come in the last column. How much? 50,000. 80,000. 83,000. Okay. That's it, no? Anything else? Now you do the total of these 3 columns. 5,000, 2,000 and 40,000, that is 47,000, 95,000, 85,000. Now minus general free allowance up to 50,000. So general free allowance here nothing. So what will be the dutiable value? What will be the dutiable value? So the dutiable value, if you see here, it is 0, minus only na, whereas here it is 95,000, here it is 85,000, and at 38.5%, sorry, that is baggage duty. Baggage duty. What is the baggage duty payable? What is the baggage duty that is payable? In this case nothing. Next case, 95,000 into 38.5%. 95,000 into 38.5%. How much? 36,575, and then this 85,000 into 110%. 85,000 into 110%. 93,500. So this will be the answer for that question. Got it? You follow this presentation so that you will get the correct answer. You will not make any mistake. This is one past CMA final question only, exam question only. Next, say this, question number 47. Mr. Nodi, aged 40 years and a citizen of Australia, is on a solo trip to India for 1 month to meet his Indian friend residing in Mumbai. He carries with him following articles as a part of baggage. Used personal effects 80,000, other articles. So what is the answer for used personal effects? Exempted. Used personal effect is exempted, and this will be dutiable. Other articles, 65 cartridges of firearms at 1,000 rupees per cartridge. How many cartridges will come under general free allowance? 50. Remaining will come under beyond 50. So general free allowance not available, and 110% is the rate. Then 150 grams of tobacco. How many grams is eligible? 125 grams. Remaining 25 grams will be 110%. Mobile phone dutiable. Sir, one mobile phone come under personal effect? No, because if mobile phone is given separate, which means that it's a new one. So then 50 cigars. How many cigars are eligible? 25 cigars. So remaining 25 not eligible. Used personal effects of his infant children for donation. Is the infant coming? No. When infant is not coming, you will not get the general free allowance of infant. Means this used personal effects will become dutiable. Generally used personal effects is exempted if the passenger is coming. Infant is not coming. Due to that reason, this 10,000 rupees will become dutiable. And he is a citizen of Australia, means tourist of foreign origin. How much will be taken as a general free allowance? Up to 15,000. Up to 15,000. Now, this question also we need to do it in the same format. So we will prepare it like this. Particulars. Particulars. Eligible for GFA, and eligible for GFA rate will be 38.5%. Then not eligible for GFA, we have two rates, 38.5% and 110%. What is the first article that you can see there? Personal effects. Used personal effects. Used personal effects, that will be exempted. Then what is the next article? Other dutiable articles. Other dutiable articles 1 lakh. So that will be eligible for GFA, 38.5%. Next, 65 cartridges. So in cartridges, how many cartridges total? No, value. 65,000. How many cartridges? 65. How much will come under eligible for GFA? 50. So 50,000. Remaining 15,000 will come under not eligible for GFA, and that will be at 110%. Then next, tobacco. So what is the total value of tobacco? 1500 is the total value. That will be 150 grams. How much is eligible? 125 grams. So 1250, whereas remaining 250 will go to 110%. Next, mobile phone. Mobile phone is eligible for GFA. How much is that? 50,000. Next, cigars. And what is the value of cigars? 5,000 divided by 50 cigars. 25 is eligible. So 2,500. Remaining 2,500 will go to not eligible for GFA. Next, anything else? Personal effect of infant. Personal effects of infant. How much? 10,000. That is dutiable. Now, if you see the total dutiable value, 1 lakh plus 50, so plus 50, 2 lakhs, 2 lakhs plus 2,500, 12,500 and 2 lakh, 13,250, 13,750, correct? Check. 1 lakh, 50,000, 1,250, 50, 2,500, 10,000. How 163? 1 lakh plus 50, 50 or 2 lakhs. 1 lakh plus, correct? 2 lakh 13,750. Here 0. And here it is 15,000 plus 2,500 plus 250. That is 17,750. Minus GFA. General relevance is only 15,000. So here there is no general relevance. So the dutiable value. If you see, the dutiable value will be here 2,13,750 minus 15,000. 1,98,250, 750, here 0, 17,750 and the baggage duty. In this case 1,98,750 into 38.5%. 76,590. 590, here 0, here 519, here 110%. 17,750 into 110%. 19,525. Okay. Next, can I proceed? So this is the answer. Duty payable 76,519. Okay, and the other things that is on 50 etc. and all chargeable at 110%, like that it is given. Now look into question number 48. This is on warehousing provisions. Look into the question. Whipple imported certain goods in May. An into-bond bill of entry was presented on 14th May and goods were cleared from the port for warehousing. Assessable value on that date was $1 lakh. The order permitting the deposit of goods in the warehouse for 4 months was issued on 21st May. Whipple deposited the goods in warehouse on the same day but did not clear the imported goods even after the warehousing period got over on 21st September. So what is the date on which they have deposited the goods? That is order of deposit. The order of deposit is 21st May. What is the period for which goods are deposited in warehouse? Should be deposited in warehouse 4 months. Generally, what is the time limit for deposit of goods in the warehouse without payment of customs duty? 1 year we can deposit the goods in warehouse, but that 1 year, considering the nature of goods, can be reduced. Accordingly, they reduced it to 4 months. So 21st May, 4 months means, so 21st June, July, August, September. By 21st September itself, 4 months is over. But this person has not cleared the goods even on expiry of 21st September. In this regard, what is the consequences? There is one Supreme Court case, Kesoram Rayan case, which says that if the goods deposited in warehouse is not cleared within the permissible warehousing period, on expiry of that permissible warehousing period, the goods are deemed to have been cleared. That date is considered as the date on which goods are cleared for payment of customs duty. Got it? Even though the goods are actually cleared at a later point of time. So read this case. Read this case. So what does this case says? Goods which are not removed within the permissible period are deemed to be improperly removed in terms of section 72 on the day they should have been removed as per Kesoram Rayan case. So when the goods are deemed to have been removed on 21st September itself, then a notice was issued under section 72 of the Customs Act demanding duty and interest. People cleared the goods on 14th October, even though the goods are actually cleared on 14th October, but for the purpose of computation of customs duty, the goods are deemed to be cleared on the date of expiry of warehousing period, that is 21st September itself. Okay, so which rate should be taken? Whether the rate prevailing at the time of deposit should be taken? No, this 15% is irrelevant, because always for the computation of customs duty on warehoused goods, we need to take the rate of duty prevailing at the time of ex-bond bill of entry. But ex-bond bill of entry is filed later, the time limit for clearance is already over, so therefore it is deemed that the goods are cleared. So whatever is the rate applicable at the time of expiry of warehousing period, that is the 10% only should be taken in this case. And what is the value of the goods? US dollar 1 lakh, on that 10% will be taken as a customs duty. Next. Here we need to compute the interest also. See the question. Demanding duty and interest, Vipul cleared the goods on 14th October, compute the amount of duty and interest payable by Vipul while removing the goods on the basis of the following information. Sir, which exchange rate to be taken? Exchange rate prevailing at the time of warehouse order, that is into bond bill of entry. We present in bond bill of entry for depository of goods in warehouse, that date exchange rate should be taken. Now, what is the assessable value of the goods? $1 lakh. 1 lakh into 65.2, 65 lakh 20,000. On that the customs duty will be 10%, that is 6 lakh 52, plus social welfare surcharge 65,200. But they are asking us to ignore IGST because IGST is exempted. So therefore we don't have to bother about IGST. What is the total customs duty payable? 7 lakh 17,200 is the total customs duty payable. Understood? Why are we not taking 12%, but why are we taking 10%? Generally we should take 12% only, but if the goods are not cleared within the permissible warehousing period, on expiry of that warehousing period, whatever rate is there, that only should be taken for computation of customs duty. But interest should be computed till the time you pay the customs duty. But interest will be from which date to which date? First 90 days there is no interest. From the warehousing order, first 90 days there is no interest. For remaining days only we need to pay interest. Now what you need to do? From the warehousing order till the date of payment of customs duty, you need to see how many days. What is the date of warehousing order? 21st May. From 21st May till the date they are making payment of duty. When are they paying the duty? 14th October. Till that date you count number of days from 21st May. In May, so 31 minus 21, 10 days in May. And June 10 days, July 31 days, okay. So May 10 days here, June 30 days, July 31 days, August 31 days, September 30 days, October 14 days. Total how many days? Minus 90 days, because 90 days you don't have to pay interest. Minus 90 days, what is that? For 56 days we need to compute interest. Is it clear? And at what rate? This is customs. We are paying to government. What rate? 15%. So take 7,17,200 into 15% into 56 by 365. 16,505 will be taken as the interest payable. Is it clear? Then can I proceed? Look into question number 49. With reference to the provisions of FTP, discuss giving reasons whether the following statements are true or false. This is one past exam question. If any doubt arises in respect of interpretation of any provision of FTP, the said doubt should be forwarded to CBIC, whose decision thereon would be final and binding. No, for FTP, which is the correct authority? DGFT, Directorate General of Foreign Trade. It is not CBIC. So therefore the given statement is false. So we need to refer to DGFT, Directorate General of Foreign Trade. Then authorization once claimed by an importer cannot be refused by DGFT. No, authorization is like license, and once the license is given to a person to import without payment of customs duty, the license will have a validity. After that, when he applies, DGFT may refuse. It does not mean that always it should be given to that person. So DGFT may refuse to grant the license or renew the license. Okay, next, number 3, IEC is a unique 12-digit permanent account number based alphanumeric code allotted to a person for undertaking any export or import activities. False. IEC is a 10-digit permanent account number, not a 12-digit. So it is a 10-digit, nothing but the permanent account number only. Then number 4, waste generated during manufacture in an SEZ unit can be freely disposed in DTA on payment of applicable customs duty without any authorization. False. First, any waste and scrap which is generated or imported into India or generated in SEZ and cleared to DTA is deemed to be import into India. So if waste and scrap is imported into India, that is import. From SEZ when you buy anything, that is deemed import. If waste and scrap is either imported or deemed imported, we need to get a license, because in the form of waste and scrap, some other goods should not enter into India. For that reason, authorization is required. Okay. So any waste and scrap or remnant, including any form of metallic waste and scrap generated during manufacturing or processing activities, are allowed to be disposed in DTA freely without any authorization, even before fulfillment of export obligation, subject to payment of applicable customs duty. Got it? Then look into question number 50, the last question. X Limited imported a machine from USA under EPCG scheme with 0 customs duty in the financial year 23-24 for production of product P. Customs duty otherwise payable is rupees 20 lakhs. Find the specific export obligation and average export obligation. Export of finished goods P in the preceding 5 licensing years are as follows. Particulars FOB. Generally what happens is that whenever you are getting EPCG license, export promotion capital goods license, you have to achieve 6 times the duty saved as an export obligation. Means whatever is the duty saved into 6 times, that much you should have made the exports. What is the duty saved? 20 lakhs. Correct? 20 into 6 is 120 lakhs. You should achieve an export obligation of 120 lakhs. Okay. So then only this EPCG license will be valid. And even you should also achieve the average export obligation. What is average export obligation? You need to maintain the average of the last 3 financial years. And beyond that, anything achieved is only towards specific export obligation. Now take the first year, and this you should achieve in how many years? 6 years. So we have data of 6 years. First year 30 lakhs. What is average? 0. Why? Because we don't have any previous year data. So average is 0. Means entire 30 lakhs will be towards specific export obligation. Can you see the table below? Clear? Next one. Next one. What is this? Next year export 30. What is the average? Average of the preceding 3 years? 30. Why? 1 year data means that itself is the average. Na? So means you have achieved the average export obligation. Anything towards specific export obligation? No. 0. Then third year 40 lakhs. What is your average? Last 2 years. 30 plus 30 divided by 2, 30. And 40 minus 30, 10 lakhs will be towards specific export obligation. Then fourth year 35 lakhs. What is your average? 30 plus 40 divided by 3. How much? 33.33 lakhs. 35 minus 33.33 lakhs. So 1.67 lakhs will be towards specific export obligation. Then 45 lakhs is the FOB value of exports. Now, what is the average? 35 plus 40 plus 30. What is that? 35 plus 40 plus 30? 35. So 45 minus 35 will be coming to 10 lakhs. That will be towards specific export obligation. Then 60. So therefore, you see the average of preceding 3 years. 45 plus 35 plus 40 divided by 3, 40. 60 minus 40, 20 lakhs will be towards specific export obligation. In every year, you achieved average export obligation, plus beyond that you have achieved specific export obligation, but not sufficient. Why not sufficient? How much you should have achieved? 120, but you achieved only 71.67. You should have achieved 120. So therefore, EPCG license granted will be recovered. Whatever benefit granted will be recovered. Why? Because they have not achieved the export obligation. Is it clear? Got it? So like this also you may get a question related to EPCG. So with this, we completed mighty 50 questions. I covered every chapter that is applicable for you. Offences, appeals, FTP, every topic I have covered. Okay. And these 50 questions are really sufficient for the overall revision. Now what you need to do is that this one day before exam revision you do na, this 50 questions you should be thorough with, plus the amendments you should be thorough with. Already we discussed the amendments, you should be thorough with the amendments, plus this 50 questions, and you need to see the monitor limits and time limits which is there. If time permits, watch the revision videos, otherwise go for the exam. Definitely you will be able to cope up. Okay. Then we are left with some more amendments. We will quickly complete that. So few amendments only, we will see that. I don't know where we stopped this last class. Refunds, correct. In refunds we were discussing. Yes. So this and all we have already completed. Look into these refunds. So this is nothing pa. Only thing, they have made amendment to rule 89 and 96 to introduce explicit provision allowing refund of IGST on account of upward revision in the price of goods subsequent to exports, on which the refund of IGST paid at the time of their export has already been sanctioned. Okay. So therefore what they are telling is that first we will export. At the time when we are exporting, there will be one price, and now there is a upward revision in the price. Possible na? We will revise the price. So because long back we exported pa, thereafter the time it reaches there, the market price would have increased. So we will make a upward revision. When we make a upward revision, then we need to get a extra refund. When we need to get a extra refund, can we again go for application for refund, for which they are telling yes. Application should be filed via RFD1 before the expiry of 2 years. Suppose if the time limit is already lapsed, so this notification came from 10th July. So for past periods also, from 10th July within 2 years we can make. Okay. So try to make note of this. Write down 59. 59. Refund on account of upward revision in price. Refund on account of upward revision in export price. See here, old export price, is say 10 lakhs and revised export price is 13 lakhs and domestic turnover if you see, that is 15 lakhs, no change in that. Domestic turnover 15 lakhs. And what is the net ITC? Net ITC will be say 1,50,000. Here also net ITC is 1,50,000. Now what happens to the refund? Refund claimed. How much will be the refund claimed? That is 1,50,000 into net ITC into zero rated turnover divided by adjusted total turnover. So please do the calculation. 1,50,000 into 10 divided by 25. 60,000 is the refund already claimed. What is the refund admissible? That is how much refund they should have claimed based on revised export price. 1,50,000 into net ITC into zero rated turnover, that is 13 lakhs divided by adjusted total turnover, 13 plus 15. What is 13 plus 15? 28. So 1,50,000 into 13 by 28, how much? 643. Now application can be made to claim an excess refund of rupees 9,643 within 2 years from the date of export. Within 2 years from the relevant date. Just write within 2 years from the relevant date. So we can claim the refund. Yes, we can claim the excess refund. Already 60,000 we claim. That excess amount we can again claim. This provision they have added now recently. Okay. Next. Okay, make it fast. Then next one. So this is circular on account of upward revision in price. For that reason only they have just given the circular one example which we already discussed. This example, what if there is a downward revision in price? Whatever refund we have claimed becomes payable. Okay. So that also you write down. Note, if there is a downward revision in price, downward revision in price, then if there is a downward revision in price, then excess refund already claimed becomes payable along with interest, because we have wrongfully claimed now. This will come under erroneous refund. Wrongfully we claimed a refund that we need to pay back. Next. So this is in case of this defense canteen. Have you heard of defense canteen? For army people and all, they can go and buy in the defense canteen. For that, they have brought in one new rule, Rule 95B of CGST rules for the refund of goods received by canteen stores. Okay. So what is this? This notification enable the canteen stores department, CSD, all defense people, that is military people and all, will buy the goods at a concessional rate from the defense canteen. That is this defense canteen, canteen stores department, to claim a refund of 50% of the applicable CGST paid on all inward supplies. So the canteen, that is defense canteen, also will buy the goods now. On that goods, whatever GST they paid, whenever they are making sale to their military people, they will not be charging any GST. So due to that reason, whatever GST paid on their inward supplies, they will get a refund of 50%. Okay, 50% of the applicable central tax paid on all inward supply of goods. And for that, a new form has been made, RFD 10A. And the rule also adds the following conditions: both the inward and outward supply should be furnished, name GSTN should be mentioned on the tax invoice, goods must be received by CSD for the purpose of subsequent supply to a unit run canteens or authorized customers. To enable CSD to file refund application electronically, a new functionality has been made, and they can apply for refund once in every quarter. Okay, once in every quarter. And suppose multiple quarters, can they club and file? Yes. They can also opt to file refund for multiple quarters, clubbing multiple financial years as per their preference. Okay. Now look into an example. So there is a CSD which is in Kolkata, first quarter, goods purchased from registered supplier for subsequent supply, total purchase value 10 lakh, 10 lakhs into 18%, that is 1,80,000, 1,80,000 into 50% is what? So 60,000. Okay, I don't know how they have calculated 3,60,000 into 50%. It is 1,80,000 into 50%. Okay, that is literally 90,000. Logically 90,000. Whatever is the 50% of the GST paid on inward supplies. Okay, here there is a mistake, but it is ChatGPT can do mistakes. Okay, then what is the step for claiming refund? RFD 10A, and they have to upload the necessary documents, and thereafter they will get the refund accordingly. Okay. Next, time limit for filing refund usually, so they have to file the refund quarterly, 2 years. Application time limit for application of refund is 2 years from the relevant date. The relevant date is end of the quarter for which this inward supply is made. Okay, so that much only. This is another one. So quickly make note of this. This is small information only. They have given a lot of unnecessary stuff. Point number 60. Successfully we reached the 60th amendment. So there is canteen stores department, canteen stores department, that is CSD. Canteen stores department, that is CSD. This CSD is having some inward supplies. This CSD is having some inward supplies. On that inward supplies, whatever is the GST paid. Okay, say for example, they paid 10 lakhs plus GST of 1,20,000, and they should be supplying to whom? Either to notified personnel or notified canteen, notified canteens. Then they will get a refund. How much is the refund that they can claim? Refund of GST, 1,20,000 into 50%, that will be 60,000. Okay, and what will be the form? GST RFD 10A to be filed within 2 years from the end of quarter. From the end of quarter. Okay. Next. So then we have one point. Usually, whenever we are making export of goods, there is a condition that the consideration should be realized in convertible foreign exchange within the time limit permitted under FEMA. So for that reason, they have given that for export of services, tax must be paid within 15 days after the expiry of 1 year or the period allowed under FEMA, okay, including any extension, whichever is later from the date of issuance of invoice for export or such further period as may be allowed by commissioner. If the payment for such service is not received by the exporter in convertible foreign exchange or in Indian rupees, wherever permitted by RBI. So for export of goods, previously we have that point. For export of services also they have made a amendment now. Okay. Now for both export of goods as well as export of services, together we will write this so that you will understand what is the difference. Okay. So say this. Number 61. Consideration to be realized in convertible foreign exchange, in case of export of goods or services within permissible time limit, under FEMA. What is it? Permissible time limit under FEMA? 9 months from the date of export. Actually, it is in your law paper. It will come in law. Okay. Consideration to be realized in convertible foreign exchange in case of export of goods or service within permissible time limit under FEMA. What if it is not realized? RBI can extend the time limit. See, this is provision. RBI on sufficient grounds, can extend for a period up to 6 months on expiry of above FEMA time limit. Clear appa? So this is the common provision for both goods as well as services. This is common provision for both goods and services. Consideration should be realized within the time limit under FEMA, that is 9 months from the date of export, and RBI can give a further extension for a period up to 6 months on expiry of this 1 year, 9 months. Now what is the amendment here? We are making some export of services. With payment of GST or without payment of GST? Without payment of IGST. Kindly make note. We are making some export of services without payment of IGST. we have made the export invoice. We have made the export invoice. From the date of this export invoice, we need to realize the consideration in convertible foreign exchange. What is the time limit within which we need to realize? Realize foreign exchange. Realize foreign exchange. What is the time limit, Pa? What is the time limit? Time limit is A, 9 months, up to 9 months, plus 6 months from export, or B, 1 year from export invoice, 1 year from export invoice, whichever is earlier or later, whichever is later, not earlier. That is the point. You see this, say this, read it. Okay, if the payment not received by the exporter wherever permitted by RBI, as may be allowed, whichever is later. Okay, 1 year or the period allowed under FEMA as extended by RBI, whichever is later. Okay, that is the time limit by which it should be realized. You got it? Previously it was 1 year. Now they made 1 year or the time limit allowed under FEMA as extended by RBI, whichever is later. What will happen if not realized within this time limit? If not realized within the above time limit, if not realized, then IGST payable along with interest. IGST payable along with interest within 15 days after expiry of such period. Within 15 days after expiry of such period. Okay, clear here? Then, so that is this, that 15 days point, this is this 15 days point, within 15 days after expiry of that period. Okay, previously also it was there, but it was only 1 year. Now they are comparing this 1 year with the time limit, whichever is later. And they have given one example based on this. So there is nothing related to it. And this point already we know. Whenever export of goods is subject to export duty, whenever we are exporting goods subject to export duty, we will not get both the refunds, option 1 as well as option 2, that already we have made note. So this information we have written already. Okay, then refund amount also, this formula already we discussed. This is updated formula, net ITC into 0 rated by adjusted total turnover. Previously we had some other points, all those things are not applicable. This is the updated formula related to this. And refund of accumulated ITC of input services and capital goods. So generally in refund of ITC on account of inverted tax structure, we saw only inputs. Do you remember that? Whether input service and capital goods will be available or not available? Not available. That's what they have clearly telling. That is, other than input tax credit availed for which refund is claimed. So here net ITC is not available with respect to capital goods, but does not include service or capital goods. That also we already know that point. Next, In audit under GST, only thing 73, 74, wherever it is there, it is replaced by 74A. Then next, offence and penalties. They have given one new section, that is 122 capital A, that is penalty on account of non-registration of certain machineries. Okay. Generally, manufacturer of certain notified goods is required to register their machine, like this tobacco products, pan masala products and all, they need to register the machineries which they are using in manufacturing process. If they are not registering, they need to pay penalty of 1 lakh rupees for each unregistered machine. Okay, see there. Notwithstanding anything contained in this act where any person who is engaged in manufacture of goods in respect of which any special procedure relating to registration of machines has been notified, if the machine has not registered, they need to pay a penalty how much? 1 lakh for every machine not registered. And in addition to the penalty, every machine shall be liable for seizure and confiscation, and provided that machine will not be confiscated if the penalty is so paid and the registration is made within 3 days from the communication of order of penalty. Is it clear? So kindly make note of this. So this is amendment number 62. Penalty on account of non-registration of machines by notified manufacturers. Who are those notified manufacturers? We don't have to remember. There are some notified manufacturers. Okay, by notified manufacturers. That is given in section 122 capital A. How much will be the penalty? Rupees 1 lakh for every unregistered machine. Rupees 1 lakh for every unregistered machine. If above penalty not paid, and machines not registered, if above penalty not paid and machines not registered within 3 days, 3 days or 3 working days? What is the words given there? Within 3 days. Okay, within 3 days from penalty order, then such machines are liable for seizure and confiscation. Liable for seizure and confiscation. Yes, both. That's why I use the word and. Penalty also payable, machines also should be registered. 1 lakh for every unregistered machine. Okay. Sir, if it is possible, could you please teach the forex related provisions in value of supply? Already taught. It is there in mighty 50 questions, already discussed. Sir, one doubt from e-way bill regarding its validity, the 20 kilometer and 200 kilometer point, does the truck compulsorily need to travel 20 or 200 kilometer a day, or after every 20 or 200? Now the validity will be like depending upon the distance. It is like total distance is 420 kilometers. 420 kilometers means for first 200 kilometers 1 day, next to 1 day, then remaining 400 first 200 1 day, next 200 1 day, remaining 21 day, means the entire journey should be completed in 3 days. Okay, 1 day you may not travel also, in 2 days also you can complete. This is like validity. Okay, next, so they gave an example for this. Then Question number, 70, summons, already I told you. Generally, whenever a person, from a person, officer needs some data or his appearance, so he will be asked to appear before the officer. The proper officer under this act shall have power to summon any person whose attendance he consider necessary either to give evidence or to produce document or any other thing in inquiry in the same manner. Okay. Now, they made an amendment that either the person to whom summons is issued or any other representative of such person can appear. Previously, only the person to whom summons were issued only should appear, but now any other person can appear. Okay. So, write down that point. Number 63. Who should appear? Who should appear in summons? Who should appear in summons? Either the person to whom summons were issued or his authorized representative, like chartered accountant, cost accountant, company secretary, GST practitioner, employee, advocate. Okay. Authorized practitioner can appear. Can appear. Of course, the moment when I say authorized representative means without power of attorney, there is no authorized representative. The moment I say authorized, how I can give authorization? Through power of attorney only I can give authorization. Next, we have newly added one section 122(1)(b). In this 122(1)(b), this is on e-commerce operator, penalty on e-commerce operator. You can see in section 122 they have added 1b. It was not given in the old study material, that way they have added now. So what is it? 122(1)(b), penalty on e-commerce operator. What penalty on e-commerce operator? Why this penalty will come on e-commerce operator? Listen, e-commerce operator should not allow an unregistered person to make supply through their platform without obtaining unique enrollment number. If they allow an unregistered person to make supply without obtaining unique enrollment number, on e-commerce operator there will be penalty. Plus, they should not allow a person under composition scheme to make supply of services through their platform. If they allow, then penalty will be under 122(1)(b). And next one, they should file GSTR 8 return. If they are not properly filing GSTR 8 TCS return, then also there will be penalty on e-commerce operator. Okay, see there. First, allows supply of goods or service or both through it by an unregistered person other than a person exempted from registration by notification issued under this act to make such supply, or allows interstate supply of goods, okay, or fail to furnish correct details to be furnished under subsection 4 of section 52, that is TCS return, shall be liable to pay penalty. How much will be the penalty? 10,000 rupees or amount equivalent to the tax involved, not TCS, not TCS. Tax. TCS is actually 0.5% of tax, but they are telling tax involved. Tax involved had such supply been made by a registered person other than a person paying tax under section 10, whichever is higher. Okay. So write down penalty on e-commerce operator. But actually this is little old provision only, it is not a latest amendment and all, but it is not there in study material, that's why they have added it in the supplementary study material. Okay. Penalty on e-commerce operator. Penalty on e-commerce operator, section 122(1)(b). Okay. What are the reasons? What are the reasons for penalty? Allowing unregistered person to make supply of goods. No, only goods. Services it is okay. So allowing unregistered person to make supply of goods, okay, without obtaining, without unique enrollment number, without unique enrollment number. Then allowing unregistered person to make interstate supply of goods. Then allowing a person under composition scheme, allowing a person under section 10, that is composition scheme, to make supply of services, or interstate supply of goods or services. Interstate supply of goods or services. Then not filing GSTR 8 or incorrect information in GSTR 8. Incorrect information in GSTR 8. In all these cases, what will be the penalty that is payable? 10,000 or 100% of tax involved, not TCS, tax involved, whichever is higher. 10,000 or 100% of tax involved, whichever is higher. Got it? Then next one. So this again 73, 74 reference, wherever it comes in penalties chapter, replaced with 74A, and new section 128A, waiver of interest or penalty for demands raised under section 73. As 73 is not applicable for you, you don't have to bother about this, and all these things we don't have to bother now, just unnecessary information which they have given. And in demand and recovery, I told you what is that? 74A already we discussed. Then next so these are all not required, because 74A is the updated provision which you need to learn, that we completed the discussion. And next one is related to assessment. Here also 74A, reference to 74A is given, that and all they have added as one amendment. In appeals already we discussed the pre-deposit. Okay, now one last amendment in appeals is related to monetary limit. Monetary limit for department appeal. Now they have added one monetary limit, like usually department can go for appeal anytime, whatever may be the amount, but they have now added a monetary limit. That alone you make note. Monetary limit for filing department appeal 65. Monetary limit for filing department appeal. monetary limit for filing department appeal. So if department want to go for appeal to GST-80, appeal to GST-80, appeal to GST-80, or appeal to who per department, appeal to High Court or appeal to Supreme Court. Okay, what is the limit? Means what should be the tax involved? Tax or ITC or the dispute. Okay, what should be the disputed amount? Disputed amount. See here carefully. Board recommendations of GST Council fixes the following monetary limits below which appeal cannot be filed. Means greater than or equal to 20 lakhs. And here for High Court, disputed amount greater than or equals to 1 crore and disputed amount greater than or equals to 2 crores. Then only they can go for appeal. 20 lakhs, 1 crore and 2 crores. This is only for department going for appeal, not the registered person going for appeal, only when department wants to go for appeal. This you remember. Next we have that's it on this. These are all some examples they have given for the pre-deposit, etc. In advance ruling, again reference to 74A, just wherever 73, 74 is there. Anti-profiteering also the same. Anti-profiteering is now omitted, that is 1st April 2025 onwards there is no anti-profiteering provisions. And anyhow you are writing for June exam, it is not 1st April 2025, so for December exams anti-profiteering provisions are not there, but for June exam anti-profiteering provision is there. Okay. Then when it comes to customs, in customs here, so there is no actually amendment. Say this, you can see here there is one notification 45 of 2017. In that notification 45 of 2017, the exported goods should be re-imported within 3 years. Say this, sometimes exported goods come back for repairs into India. In such situation, the re-imported goods can avail exemption from paying duty subject to satisfaction of some conditions. First we are exporting the goods, those exported goods are coming back to India for repairs. Okay. So the re-importation is for repairs. The time limit for re-import should be 3 years from the date of export, and increase in the time period for duty-free re-import of goods export under warranty from 3 years to 5 years. Previously 3 plus 2, now it will be 5 years plus 2 years. In case of Nepal, such time limit is 10 years. And time limit for re-export is 6 months, it can be extended for a further period of 6 months, that already we know. And the re-importation is for reprocessing, refining, remaking, and it should be within 1 year from the date of exportation. So all these things. And baggage duty, so they have given, so generally we can import the samples up to 1 lakh, that limit is now extended to 3 lakhs. Through baggage we can import some goods, samples, previously 1 lakh worth of goods, now they have extended it to 3 lakh worth of goods. And in FTP, so RODTEP benefits, so SEZ was not eligible for RODTEP benefits, but now for SEZ also they are giving RODTEP benefits. These are some small points only. With this we completed all the amendments. Okay. Then can we cover MQP bank in this session? MQP means model question paper. Already model question paper questions are included in my T50. Okay, already many of those questions I have included, you do that. Okay, and you try the remaining questions. Whenever you have doubt, you just ask me, I'll be able, because see, I cannot discuss too much, because if I discuss too much there is no point, because we have other chapters or other syllabus. also, other subjects also. So this is sufficient. That's why I just made it like a 2.5 session where we are covering amendments, where we are covering this mighty 50 questions. So what I tell you is that these amendments you complete, mighty 50 questions you do once again revision. Then I told you now monitor limits, time limits. If time permits, you watch the other revision videos. And also the book is also given to you. Do some questions based on those book also. Okay, this will be sufficient at this given point of time, because hardly in 1 or 2 weeks the exams are gonna start. So therefore at this time it is better to restrict and evenly spread out for other subjects as well. Okay, that is with respect to you. And so I really wanted to do lot of things, but at the same time, considering the time etc and all, I could not do this. Okay, and one important announcement I just wanted to make, that is we are starting CMA final regular batches from December 2025 exam onwards. Okay, and so far I have been taking only my subject, indirect taxes. Now we are having other subjects also. So like suppose, I think you have completed all coaching, na? Group 3, Group 4 classes and all you have completed. If your friends or your juniors, anyone wanted to join, they can join. So far CMA I was doing only in recorded mode. Now I am planning online live as well as recorded henceforth. Okay, so this will be the class timings. For Group 3, the class timing will be morning 8:30 to like 6:30 to 8:30, Monday to Friday. Saturday and Sunday 7 to 1. This for Group 3. And Group 4 classes Monday to Friday 6:30 p.m. to 8:30 p.m. and Saturday Sunday 4 to 8. This is how we have scheduled. All subjects we are offering, and the fees also reasonable only compared to others. For theory subjects we are charging 6,000, and for practical subjects we are charging 7,500 plus GST. And this will be online live and Google Drive. So face to face, depending upon the number of enrollments we will do, otherwise it will be online live and Google Drive. You please inform your juniors etc. We are starting this batch from July 10th, and if they can join one subject also, if they join more than one subject, they will get discount as well, 10% discount. You just inform them so that they can get benefit out of it. And from now on, every attempt you can expect the supplementary study material video and the Mighty 50 video in our YouTube channel. Okay, thank you. All the very best for your exam. Do well, and any support you need, count me on. I am there for you. Okay, thank you. Take care all.